Holy smokes! Wow, what a morning. Today we have PPI, but there is a little bit of a teeny tiny little rally going on in the pre-market. It's so tiny, it's a double on AMC and GameStop just in the pre-market. Holy smokes! We know that the pre-market is usually thin for trading liquidity, so it's kind of the perfect time to really crush the order book and really get prices to skyrocket up. So what's remarkable is you got this incredible push now on AMC and GME. You got AMC raising $250 million. Like literally the day their stock rose 78%. Frankly, that's kind of exactly what these companies should be doing to survive. And what's remarkable is it's almost like when they raised money, ordinarily the stock would go down, but now this environment of excitement for a lot of these stocks that have had a lot of pain lately. You've actually got more funding now for these companies, and you actually lower the odds of bankruptcy. So for all the folks that are like, the meme momentum and the meme rally won't affect fundamentals. The company's fundamentally whatever, regarding when the stock's meme rally or momentum rally, which is what this really is. I like to call it momentum. I don't like meme. I think meme sort of talks it down. I think momentum is what it is. And when that happens, these companies become substantially more profitable from well, maybe not profitable, but from the point of view of they become substantially more less likely to go bankrupt because they can bolster their balance sheet substantially. Let's see here. I just want to check really quickly. Can somebody on YouTube just give me a heads up if we're streaming okay? I just got a little error message here that maybe there's a little oopsie doopsie, but it's sort of a maybe, so maybe it's nothing. I don't know. Maybe somebody can give me a heads up on the chat if everything's okay. If you're watching on YouTube, if you're watching on X, I don't think that there are any kind of issues. Okay, cool. So anyway, yeah, here we go. This is going to be really fun. You've also got a oh good, okay, perfect, thank you so much. We've also got a phenomenal catalyst here. We've got PPI, which is a remarkable there we go, throw that in here. Okay, perfect. Which is a remarkable sort of event that it's coming before CPI. See, usually you get the producer price inflation report after CPI. Today, you're actually getting it before. And so today's very interesting because you're going to get Jerome Powell speaking at like 7 a.m., I think it is. I'm going to verify that in just a moment here. But J-Pow speaks, and then after J-Pow speaks, what you actually have is the lead up to CPI. Now, keep in mind, and I think this is very important if you are if you're trading the rally, which I there's definitely money to be made here. If you're trading this, make sure you keep in mind that the CPI PPI reads could potentially move the entire market. And so what you just don't want, it's 7 a.m. for JPOW. What you just don't want is the market to collapse on a really hot PPI or CPI report, because it'll probably take everything with it. Usually, we only get these sort of momentum rallies when the market is at relatively high levels. Not necessarily the top, like for example, December, January, February, March of 2021. So December 2020, and then going into the others, the market was certainly rising substantially and had already risen substantially, but it wasn't by any means at top yet. But usually these occur when we are at higher levels, and so a really bad CPI or PPI report here could have some derailing effect. But it's not exactly clear. But let's see. We got PPI coming out within the next 3 minutes. And what we're looking for on the month-over-month figure is a 0.3. And that's going to include your energy figure in there, so 0.3 for the month over month, which is interesting because we've also seen energy prices come down. So, you know, we've seen oil prices and gas prices come down. Some commodities have been falling. Right now on oil, you're sitting at just 83 bucks a barrel. That's down almost 10 bucks from where we were. Natural gas, let's take a look at how natty gas is doing. 234. Okay, it's actually up a little bit from the end of April. Most of April you were down, so you did actually have a rise in nat gas. That's unfortunate. But most of April, that nat gas was actually declining, with the exception of the last week. So that could lead the average to move up a little bit just on natty gas there. But anyway, looking at that 0.3 headline figure and then 0.2 for the less food energy and less food energy trade, then we'll also have the final demand numbers, which we're looking for 2.2, and that's the year-over-year number. So stay tuned for that. That'll be out within the next 2 minutes. It's going to be very, very interesting. Okay, let's type this in here. There we go. Okay, perfect. Okay, all right, excellent. So then we've got, yeah, and keep in mind, if these come in low, let's say, just to take the other, let's take the under, for example. Although I guess, would you call it, I mean, the under is usually when you take the lower number, but sometimes people refer to the under as the bad. So bad would be a higher number here. Anyway, a little confusing. But anyway, we're coming up on this. We're about 1 minute away from the release of the producer price index. We really want to get this out of the way, and if this comes in strong, if this comes in just at expectations or below, I actually think it's going to be good for the momentum rally. Because you're removing a negative catalyst. Like, I don't really see it as like a big positive catalyst unless it really came in low for the momentum rally. But you want to remove the negative catalyst. And a good PPI report here could be a good little leading indicator for the CPI report. All right. We're now 20 seconds away from the report. We do have a price increase on the courses on building your wealth. Link down below tomorrow evening at 11:59 p.m. and all the buy-sell alerts in the Stocks and Psychs group. All right, here we go, and the numbers are hot. It's bad. PPI month over month comes in at 0.5, expected 0.3. Core 0.5, expected 0.2. X-Food Energy Trade comes in at 0.4 versus the 0.2 expected. And the year-over-year core comes in at 2.4 versus 2.3. Not good. Probably mostly not good for the Qs. Yeah, big fat red candle there on the Qs. Down about 50 bips on the Qs. But AMC doesn't move a lick, and GME does not move a lick either. Holy smokes, they don't give a flying rat's hiney. But the Q's very, very upset about that. Holy smokes, that's a hot PPI report. Not good. We just got a revision. But the revision was actually good. Now that is weird. The revision has a prior of 0.2, gets revised down to negative 0.1, and the prior core was 0.2 and gets revised down to negative 0.1. What the hell? What is going on? The revision might actually help a little bit. Let's listen in here for a moment.
0.4, that is 1/10 hotter than we were expected, equal to the rear view mirror at 2.4, and that means we have back-to-back 2.4s, and last month's 2.4 was the hottest number since August of last year. And
bond yields up about 3.5 basis points.
Food, energy, and trade up 3.1%. We're expecting up 2.8. To find a hotter number than 3.1, you're going back to April of last year. These numbers are obviously hot. We have moved from 483 in twos to 480.
I'm going to get off this since I already read this off. Look at this. Producer price index rose 0.5 seasonally adjusted. The BLS reported today final demand prices, let's see here. Final demand prices declined 0.1% in March and advanced 0.6 in February. Okay, yeah, that's good. So you can see these numbers here. So we had 0.1 in March, 0.6 in February, and 0.5 in April. So there are definitely some hot numbers here, but this is some crazy volatility there in those numbers. Okay, let's see. Nearly 3/4 of the April advance is attributed to a 0.6% increase in the final demand services category. Whoa! 75% of this increase coming from final demand services. That's the hot portion, folks. That's the part that Powell's pissed about. Final demand services moved up 0.6% in April, the largest since jumping 0.8 in July of 2023. 70% of the April increase can be attributed to final demand services, less trade, transportation, warehousing, which advanced 0.6. Margins for final demand trade services rose 0.8. Blah, blah, blah. Okay, let's get into it. Product detail. Okay, here we go. 3.9% advance in the index for portfolio management was a major factor. Index for machinery equipment, residential real estate services, automobile retailing, guest room, rentals, so hotels, truck transportation and freight also moved higher. Conversely, prices for air services moved down 3.8%. As well as the index for lubricants and fuels and gaming receipts down. Okay, interesting. Let me go to an actual table here where we could get some. Hold on, I don't know what my HDMI just totally freaked out there. But what I want to do is get to the actual table here where we could get a quick look into some of those actual weights. But that's not good. That's not a good sort of leading indicator for your CPI. So here we go. Then we're going to go down. I always like to start kind of at the bottom on these because that's where you get the services. But with PPI, it's weird because you get all these different stages. And so we'll go to the bottom. Let's see here. Services. Services, that's for intermediate demand. I'll take final would be nice. Final demand, final demand, final demand. Okay, let me look at the table. I have to look at the table, though. March to April. There we go. Seasonally adjusted on the right, and then the weight on the left. Okay, got it. So here, final demand. Let's trade services. Let's see here. I want to find, okay, investment services. Investment services up 2.1%. That's hot. Finished services up 0.5. Okay, that's pretty hot. Finished goods, excluding foods, up 0.7. Holy smokes. Why are goods all of a sudden going up again? Look at this. Last month you were at 0 on goods. Now finished goods are at 0.4. That's not great. Services for export, 0.7. That's not great. Total government purchases up 0.6. Thanks, Biden bucks. That's up 0.6. Personal consumption was up 0.4. Well, that's a good sign for the retail sales number. Although it didn't help Baba, apparently, in the pre-market. I think Baba had earnings here, and Baba's looking at... Yeah, Baba's down about 5 in the pre-market. Okay, intermediate demand. Manufacturing services down. We've got transportation services down. Some of these others are a little up. Okay, that's fine. And then we get into these different stages, which gets a little bit more boring. But anyway, okay. So, report overall, not great. I'll put it that way. That's bad. That's pretty hot. The revision somewhat helped. I'm not sure why the revision is so low for the prior, but we'll take it. I mean, everything in the prior release got revised down, but this one's way hotter. So I'm kind of like, okay, is it more good than it's bad? I think it's more bad than it's good, but it's not horrible that we had this prior revision that just turned negative. I mean, you lost negative point, or you went down 0.3 from the prior read of PPI month over month, and you beat by 0.2. Well, you came in worse by 0.2 over here, and then you on core went down by 0.3, and you came in hotter than expected by 0.3 here. So I don't know if there's some funky seasonal adjustment or what, but. That's some weird, funky math we got going on there. As you can see, the Qs are actually surprisingly trying to brush this off. Oh yeah, this morning's let's see here. This morning figures comfortably beat the expectation. Well, it came in higher than expectations. Yeah, a mitigating factor is the substantial downward revision to the prior data. And the year over year came in pretty close to expectations. Year over year 2.2, year over year core 2.4 versus 2.3. Yeah, so weird prior revision that definitely helped here. But okay, we'll take it. Again, AMC doesn't care, and GME does not care. This is quite remarkable. Yesterday, yesterday in the trading day, we had a couple lines over here in play on GME. You can see the market ran up to about 36 from its about 30 position. Pre-market, we hung out about that 36, 37 level again. Ran right up to the next Fibby at 43. Ran right through the next and the next to basically no man's land over here. I don't know why we're capping out at about 80 bucks there. Worth drawing a little bit of a line over here. So let's just make a sort of I like to call them my day trader lines when I go for a yellow. We're just gonna go for a horizontal. There we go. Let's go ahead and turn that to yellow. Yeah, not sure why, but that's like a multiple bounce over there at about 80 bucks. Let's see what exactly it is. So the exact number is, let's see here, high, yeah, 80. 79.99, 80.07, 80, 80. Okay, I'm going to go with 80 on that. Not that these pennies really matter that much, but we'll do it for a little exactness. Okay, so again, AMC and GME give zero hoots about this this hotter PPI report, and the Qs really don't mind it as much as you'd think they would. So Jay Powell will be speaking today, and we'll see if he ends up Jay Powing us. But as you can see, Alibaba down about 4.7, Amazon's about 69 basis points, Supermicro and ARM are down a little bit as well, and Nvidia's down about 50 basis points. How's Tesla enjoying the move after this PPI read? It's up about 30 bips. Okay, so it had a little red candlestick there after the data came out, and it's trying to stabilize a little bit here. AMC GME holding on to that 100%, as well as Robinhood. Look at that, right back to the 1794 line, gets rejected at 1792. We had some trades going on this line here. This line's pretty dang popular. Note though, it's not just AMC or GME that are moving. It's also worth noting you've got a Sunrun. That's up about 4.8% here. Cost is up 32. BlackBerry's up 25. Rent the Runway up another 15%. If I go to SunPower, where's the darn thing? SPWR. Oh, SPWR. What a weird ticker. There we go. Holy smokes! It's up 131%. It's actually up more than the others. Yesterday it was up 19%. Today it just comes out of nowhere. And I wonder how First Solar is doing. First Solar, if this is participating. Nope, First Solar's not participating. But SunPower certainly is. Oh my goodness. It seems like we're going to get back into the short environment, dare I say, where the shorts get smoked again and the suits go to the poopers. So, it'd be, let's see here. Okay, let's get into some more goodies here. Okay, so let's listen here for a moment. I want to just see what they're saying. Oh, 10-year, 10 years only up 15 basis points, big deal.
On top of being targeted and trying to go after things where we really do want to see investments, that still leads to the inflationary aspects of it.
I do really think it's a good example of thinking about the medium and long term and how important that is. Just as in housing, what I'm really concerned about the Fed doing is killing housing starts and reducing the medium term supply of housing when we're in a housing crisis. If you think about gas prices and energy prices, the Inflation Reduction Act has huge investments in bringing those costs down for families over the...
Yes. Okay, let's go ahead and do a little short interest looking here. Why don't we? So I think what I'm going to do is I'm going to run a little screener doozle here. And we're going to go with, how about we go with, let's see here. Let's start with the NAS. And let's go look at the top 50. Let's see if I can get these to pop up. Okay, so the highest short interest in the NAS is SunPower. Hey! Okay. All right. Wow. Let's make a little list doozle here. Why don't we? All righty. Okay. You ready for this? So, numero uno. SunPower, SPWR at 95.61% as of the estimate for today. Okay, the next one, you're not going to believe this one. Ha 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 ha. It's actually not moving that much in the pre-market. I mean, 16% would be an amazing day, but at 41%, Beyond Meat. BYND at 41%. I don't know what alt is. EVgo is up there though. EVgo at 31%. EVgo is only up 4%. EVgo. That one's up 31%. Ooh, Plug Power 28%. Oh, it's up 44%. 28% for Plug Power. Power! Okay. How about Sunrun? 24%. That one's also moving this morning. Smoking the shorts, baby. Sounds like a squeeze to me. 6% on the Sunrunners. Then you've got Marathon. Ooh, 22% on Marathon. Oh, and it's down 2%. You know, you did see BTC. Yeah, look at this. This was crazy. So yesterday, I don't know why, but it just tanked right under my 61.7 line. I keep complaining about the 61.7 line, but I think it's really in play here. We got a couple rejects over here. Obviously, we're in no man's land under it. You know, there's just shelf, obviously, at 60,000 here. And tried to come back up, right back down. So you're not doing so hot on really getting the momentum here on BTC. Now let's go to another list here. So if I go with the short interest on the Russell 3000, those are roughly the same with the exception of the fact that I get Virgin Galactic in here as well at 29%. So if I throw in Virgin Galactic, yeah, Virgin Galactic's up 25% as well. SPCE for Virgin Galactic. Then I'm going to go Russell 2000. And we're going to go SunPower Beyond. Oh, I remember this one. LAZR. Laser. That one's only up about 6%. That one's got about a 30% short position. That's also about 30% for space there. And Spirit. Oh, Spirit Airline. The Dave Portnoy save. Oh, wow. Spirit Airlines is up 27%. Save. Amazing. Hey, thanks for joining, becoming a course member there. Yeah, how do you get in the morning live? Well, if you watch lecture 1.0, so the very first one there, you'll see the instructions for making sure you get in. And then you get the links for exactly where you can see the full archive of all the lectures going back to, what's it called, like 2018 or something like that. So kind of awesome. So check that out. Anyway, so let's take a look at another one here. So what do we got with clove? Let's see here. Clove's up 14%. Let's write that one down. Clove 14%. Let me see what. Oh, that stock's up 14%. But let me see what the actual what's it called is doing. I'll just take a sec to run it up. Clove. Come on, baby. Okay. Clove. We are looking at. It's only about 13% short. That's pretty close to the 14% movement it's got. Very interesting. Oh, Tupperware. Wow. Yeah, let's take a look at that. Oh, my lordy. Tupperware was up 36 yesterday, up 31 today. T-U-P. All right, let's take a peek here. Okay, while that's loading, yeah, remember, all the trades we're going to be doing, which we've got some trades, more trades coming today. All the trades we're doing, if you want those buy-sell alerts, make sure you're part of the Stocks and Psych group. You get lifetime access to them, which is kind of cool, given that you only pay once and you get lifetime access to all the alerts. The number here, okay, we're going to go FUBU, and then FUBU quickly is 21%. So write that down. FUBU, 21%. And then we're going to go with Tupperware. Yeah. You know, the app's getting a little overloaded right now. Little overloaded with a little too much enthusiasm. Okay, BlackBerry's only 7% short. And I think the other, what was I gonna, oh, let's see, Carvana. Carvana's 28% short. Carvana, 28% short. Did I do TUP? I don't know that we got TUP in there yet. TUP's 23%. TUP. And then we've got Clove, we covered. HKD. HKD. I don't know what that is. It's an ADR. It's like 8% short. Yeah, Rivian's like pretty high up there on shorts. 21% for Rivian. Okay. Lucid. That's a good question. And Tilray? Tilray's 14%. I'll write these down so I don't have to repeat them. Lucid. LCID. 31%. Wow. Okay, so LCID. This is up about 7%. Yeah, pretty wild. SoFi. I don't know that SoFi's. SoFi's at 18%. SoFi, 18%. Let's also see what the short interest is on, obviously, the GME and the AMC. 23 for GME. And then 19% for AMC. Microvision. Let's take a peek. MViz. MViz is 25%. Nice. Wow. Pretty impressive here. So let's go ahead and write some of these down that we haven't actually saved on the left here. Yes, okay, Microvision, we got that. And then let's throw in HKD. And yep, there we go. Okay, good. So how are the Qs move? Ooh, wow, nice move there, SunPower. The Qs are only down 14 basis points after that hot PPI read. Those revisions certainly helped. Still weird. What a bizarro reading to see the PPI smash like that, and then the revision, and basically see the revisions kind of pull it right away. Oh well, it'll set up for CPI tomorrow, and then we'll also be getting J-Pow at 7 a.m. J-Pow will be talking, so we'll get to cover good old Jerome Powell. Powie wowie. Let's listen in here for a moment.
About creating more jobs. That is the opposite of reducing demand. So that's putting pressure on prices. And I don't think that restrictive monetary policy can get ahead of that. That's why we're talking about a bifurcated economy now.
Wouldn't you rather have the Fed spurring the private? You don't want to hurt private. You want to, and you'd want to maybe tamp down on the public, and it's the opposite effect is what you just described. So it's almost 180 degrees from what you'd actually try to do.
But think of the way the Fed raises interest rates. At the last meeting on May 1, they unanimously decided to keep paying commercial banks 5.4% to leave their money sitting in their Fed deposit accounts. And if you look at the way monetary policy is carried out, that is because then banks are unlikely to make that money available elsewhere. Meaning
Blah, blah, blah. Okay, this is basically Fed money printer go burr, baby. That's mostly because the government's still spending like, well, crazy. Yeah, anyway. So, remember, AMC raised now $250 million in a stock sale. They had a shelf offering up, and they basically dumped 72.5 million shares at an average price of $3.45 before fees. Now, what's remarkable about that is the stock's now at $11. Now, that might make you think, oh, wow, they're stupid for having raised at $3.45. The reality is they could just dump again today another $72.5 million if they wanted to, or 72.5 million shares. Except rather than raising $250 this time, they would raise $833 million. That's a difference of $500 million. $500 million difference. Holy crap. It's crazy. Crazy numbers. Crazy numbers. So, okay. Very interesting. So, now, there's also news that the Tesla supercharger team, some of the folks who were laid off have started, it was the entire supercharger team was fired. Rumor has it that basically Elon asked the leader or the head of the supercharger team to remove any of the non-performing employees from the company. And when they did not, they ended up with a little message that said, "Great, your entire team is fired then." And so that's no bueno. But yeah, we let's see here. We are now hearing that some of those folks are being called back to the team, and so that is helping somewhat. The stock is moving up slightly here in the pre-market as well. And let's see here. Okay, we're going to write this down. So this morning we have J-Pow, PPI, GME, AMC, a lot of movements here. Okay, a lot going on today. Goodness gracious. All on the eve of both retail sales and CPI tomorrow. So those will be pretty big. But if it's anything like it was today, frankly, they'll just end up being a nothing burger, which is also kind of wild. But the numbers were hot. If you don't get the revisions on CPI and you get a hot read, ooh, not so great. Tomorrow, so again, tomorrow, CPI and retail sales. Let's quickly write this down. Today, we had PPI, which came in, again, I'm just going to write down the quick little bottom line here. So PPI month over month comes in plus 0.2% over expectations. And then we get a down revision by 30 basis points. Core, write that down. Core was hot by 0.3, but a downward revision also of 0.3. And then the year over year at 2.2 versus 2.2 expected, down revision of prior by also 0.3%. Interesting. The downward revisions for the year over year came in, and those also came in down from the prior to just 1.8% in prior. Those revisions are wild. It's crazy how they just sort of clean this up with revisions. 2.4% versus 2.3 expected for the core year over year. But again, down revision of prior by also 0.3 to just 2.1% in prior. Those revisions are wild. Okay, so those are all written down now. So that's PPI. That's behind us. And again, I think it was 2/3 was due to services. Yeah, we mentioned that. So 2/3 of increase due to services. Let me see how the bond market's actually reacting to this. They're usually pretty good. Wow, the 10-year is basically flat on this. That's crazy. 10-year flat on results. 3/4 of increase due to services. All right. So Jerome Powell speaks at 7, and I want to see what he says about these revisions. What kind of hint is he going to give us for CPI and retail sales tomorrow? He might drop a banger and say, hey, we might end up having similar numbers as the PPI on CPI, which means or implies that you'd be getting a similar kind of downward revision in the prior month. So it doesn't even matter in that case if you get a hot read, because again, you might be anticipating a downward revision. Just quite remarkable. Wow, I can't get over those revisions. Oh well, I'm going to have to. So we'll listen for JPOW, but that'll be more of a 7 a.m. topic. For now, we're about 31 minutes away from the start of trade. Obviously, if you're trading in the pre-market, you're already seeing some pretty substantial moves here. You've got, again, Tesla's up about 66 basis points. The Qs are down 16. And sorting by momentum, you have 130% on SunPower, 121 on GameStop, 114 on AMC. Plug Power's up 59%. Costs up 38, Tupperware 35, Virgin Galactic 27, BlackBerry 25, Beyond Meat's up about 20, and Rent the Runway 15, Clover 14, Microvision 10, Luminar about 10 as well. Sunrun's over there at the 9, Lucid's up about 8. Reddit moving now. Reddit gets to participate in the momentum rally as well, 7.6%. Wow, remarkable. All right. So then, let's see here. So I would expect more stock raises here from AMC. I actually think if AMC plays this right, they could probably pay off their debt, honestly. If they play this right. Let's look at their debt. Because if they pay off their debt, oh, that would be amazing. So, their current cash flow at this company is about negative 250 mil per quarter. So they just got a free quarter of operating losses from their money raise yesterday. If they raised money again today, they'd get like 3 free quarters. But let's look at their debt. This is what I'd want to pay off. Pay off all my current bills, $1.5 billion. Then I'd want to pay off these corporate borrowings here, 4.5. You need about $6 billion. that you have to pay off here. So if I look at AMC's market cap, you're about a 1.5 billion dollar market cap. You just doubled. You just created 1.5 billion dollars out of thin air, which is really cool. And it kind of means your corporate borrowings could get, you could start seeing some massive pay down here on debt. So, frankly, they should raise money again today. I wonder how much they authorized. AMC shelf offering. Let's see. When did they last do their shelf offering? March. No, you knuckleheads. Hold on. Oh no. Okay, I thought they only did 72 million. Okay, that's fine. To sell up. Oh well, here. Okay, that's September. How much did they authorize? Because usually you give yourself a lot more runway. I don't know how much they authorized. Let's find out in the press releases here. We know they got 72. Come on. There we go. Okay. Preview, let's see. Settlement, popularity, whatever. Fourth quarter. Did they mention in their first quarter? Maybe they mentioned it here. Let me see. Shelf. No, they did not. Offering. So share issuance. No, that's old news. No, old news. I think that's all they have. Equity distribution agreement. From time to time, having an aggregate offering price of 250 mil through an at-the-money offering. I think that's all they have right now. They'd have to do another filing. And then there's going to be a delay. How long? What's the delay? Let me see really quickly. Delay after shelf offering to raise money. Let's see here. I think it's like 3 days. I think if they issue a new offering, they might have to wait a few days to actually be able to raise money again. Because it looks like they fully blew their prior offering. I think it's 3, but I'm not sure about that. Typically, I'd have to figure that out. And it depends on their status too, but that would be really interesting because if they could file another offering, they could probably pay off a substantial portion of their debt. But it looks like their current, what's it called? It looks like their current, what is it? Carl, I hardly get notifications on your live. Well, make sure you hit the subscribe button to this live channel because this is a separate channel, right? We're doing the live streams now on the Meet Kevin live channel. So you have to hit subscribe, and then you have to hit the little bell. You can also, if you guys have issues with notifications for the YouTube videos or the live streams or whatever, just download the Meet Kevin app. So just literally just type in, like that's the whole purpose of the app, along with, some other stuff we put in there. But you could just type in Meet Kevin on the App Store, and then you could download it, and then you could turn on notifications there. And those notifications are way faster. Yeah, Andrew here says I use the app too. Oh yeah, thank you for that. I did miss my pin. That's funny. Appreciate that. So anyway, there you go. Thanks, Gas Man. Appreciate you. There you go. All right. But yeah. So point is, they could do another shelf offering. Pretty sure there's a period of time they have to wait before they can actually sell the shares at that point or issue the shares at that point. But they'll be able to pay off some serious debt here if they play this right. Now, GameStop. Let's see how much GameStop could do. So GameStop. What kind of debt have we here? All right, here we go. So GameStop has net cash flows of negative $200 million. free cash flow is negative about, call it about negative $240 million. So you're losing about $240 million in the year. AMC loses about $250 million in a quarter. So AMC loses about 4 times as much money as GameStop. And AMC's also got a lot more debt. The long-term debt over at GameStop is only about $17 million. So you don't really have a lot of debt here. You do have bills to pay. You got bills to pay of almost $1 billion. So you should be paying, I mean, you do almost have $1 billion of cash. But I would raise money here as well and pay this off as soon as possible. So, very interesting. Okay. So, back to here. 23 minutes until the bell. Let's see here. Model Y, Tesla now offering 0.99% financing, no brainer if you've been waiting to buy a new EV. Yeah, so we were looking at that a little bit yesterday. We all were looking at the little calculators over here. And what's remarkable is, how do they get from $399? That must be from the lease. Oh, that's probable savings. Okay. So what's interesting is, if I take the cheapest Model Y possible, and I take a 72-month term on financing this with $4,000 down, my payment's about $603. If I go with a regular excellent credit score, and I go with the 649%, I'm at about $710. So you save about $107 per month right now with that 0.99% Tesla's offering. It's obviously, because they're pushing Model Ys because the inventory's high right now. But yeah, I mean, those are some juicy numbers. They should really have this be sitting at 0.99% as opposed to this. But you could just change this to the promotion here, 0.99%. And it starts looking really, oh, there we go. It does change, 0.99%. Look at those numbers. That's, hold on. I don't want the savings. There we go. So those are your payments without some of the savings at this low interest rate, 0.99. It's pretty remarkable. When I bought my Model X, I got a 1.49% interest rate, and I'm like, this is the coolest thing ever. That was back in like 2017. They were doing promotional interest rates then too, so pretty remarkable. So let's see here. Head of Cybertruck manufacturing has left. Is that true? That's interesting. Let's see what you got here. Okay. Oh, interesting. Post from LinkedIn. After triumphing the epic launch of the Cybertruck program and the ramp, past blah, 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 my adventure with this great company has come to an end. Wow. Wow. Director of Cybertruck manufacturing has left. Oh, a lot of people leaving. So let's see here. AMC could use the money to open more movie theaters, start new merch lines. Yeah, absolutely. Definitely could do that. Red Lobster in distress, closing multiple locations. Yeah, I was actually reading a story about that. One of the things that's wild about Red Lobster is one of the reasons they got whacked is they had this all-you-can-eat special on shrimp. And apparently that skyrocketed their costs, but they just kept the special because it kept people coming in. That's pretty remarkable. So, very, very interesting. Russell's running? Well, yeah, it probably is because of these numbers. I bought a Model Y 3 weeks ago. I was so sad when I learned about the 0.99 APR over the weekend. My payments would have been $130 less per month. Yeah, that's one of the things with Tesla is I was talking to the team yesterday, and they're like, some of them are like, oh, I want to buy a Tesla now. And I'm like, if they're doing these specials now, what do you think you're going to get on Black Friday? No guarantees, obviously. Maybe you never see the 0.9 again. But yeah, it is one of those things where pretty much anybody who has bought the car over the last year would have gotten a better deal had they waited. But that's frustrating. Waiting obviously sucks. So Robinhood's only at 6.88% short. Good question, though, here. Thank you for that. Yeah, and then obviously that hits the depreciation curve as well. You know, I understand some people are like, oh, but Kevin, you know, the interest rate doesn't affect the depreciation curve as much. Wrong. Because now used cars that aren't getting that 0.99% are substantially less desirable, to the tune of $100 a month, which frankly like tanks the resale value of a used Tesla without the 0.9 to the equivalent probably of about $100 a month. So, you know, even like the used car prices will compress, and you're actually going to accelerate depreciation when you have low interest rates like that on the new vehicles and not on the used, right? Accelerator pedal must have done it, man. AMC is not the problem. It's the movies that are being made. Oh, I agree with that. We really need some more movies. It's crazy right now. It seems like they're all going, like a lot of them are just going, a lot of productions going straight to streaming, you know? App doesn't come up in the Android App Store. Are you serious? Oh, I'll have to fix that. Well, it was there last I checked, but now I'm going to pick this Android up here and find out. And if it's not there, we'll get that fixed. I got to take care of my green texter friends. Uh-huh. I'll have to fix that. Yeah, you're right. Okay. It's interesting. Okay. We will take care of it, and we will get it fixed. Very interesting. Okay. Well, I guess just iPhone right now. We'll fix that, though. Okay. What else? So, let's see here. Okie dokie. Did you see Goldman, Bank of Montreal, or in GME as of yesterday? Oh, well, yeah. I mean, you just got to get started on the rally. Why would you not be in it? You're just getting started, baby. I own a BMW. Quality is 100x better, says someone here, than Tesla. Bill needs a $200 coupon code. Hey, man, I think the coupon code's actually pretty good right now. I think the net price is going up a good chunk tomorrow. We've had this price increase planned for a hot minute, probably about the last like maybe 3 weeks or so, that we'd have another bump on CPI day. And it's weird, you know. I feel like when we set these schedules, it feels like it's so far away for these price increases, and then all of a sudden it's like, oh crap, it's already tomorrow. It's really weird. But a lot of people really appreciated getting in on that last coupon, and yeah, let's go ahead and see what we can pull off with some sweet trades, especially in this environment where the shorts are really getting squeezed again. This is going to be really entertaining. So take a peek and see what happens. But you know, I think my last few trades have been a little tighter. I didn't have any close. Oh, hold on a sec. I don't know why it's doing that. There we go. Last few trades. I want to pull them up here. So I have, what did I have? The last positions I closed at the end of last week. We had, this was a little boring. Only an $815 trade there. That was a little boring. This was a 3K. That was on the 8th, was 3K. I just like to post the P&L every day. That was a $3,100 day. And then we had, what is this? On the 7th, we were, sometimes I'm only trading with, you know, 7 to 10K. That was a $5,700 day on the 7th. And then, where is the next one? Just gotta scroll through these photos here. P&L. I like the P&L. Oh, that's a lot of fun. Oh, yeah, this was my April 29th. That's the last screenshot I have before that on the iPad. That was my April 29th trade, 511K. That was crazy because that was a 100K trade. and that 5x, that was freaking nuts. Anyway, my goal always is to just send whatever I'm trading. My goal is to send those buy sell alerts. I haven't had a red day in a while here. Now I've got a hedge trade going. That could end up red. It depends what happens tomorrow with CPI, but I'm hedging going into CPI. But anyway, those are all the last trade alerts I have, I'm pretty sure. Let me see, unless they're not on my iPad. But anyway, I know somebody was asking about that. So it's no guarantees that we could always make money. The last trades, I'm just looking here. That was the, no, it showed that. Green. Oh, I missed this one. May 3rd was up $20,400. Oh, that was a good trade day. What was that? Oh, that was on an, I was playing the end phase. 113 to 118 line. That's pretty good. That was an 18K day. Oh, that was a good one. Yeah, okay. So anyway, obviously you can't guarantee there's always going to be a win. I've lost money on trades before, but the last, May so far has been very, very good, or the last 30 days, quite frankly, have been very, very good. So, again, my goal, when I see, basically what I do is when I see trends, so if we're playing certain fib lines, if we're playing certain rejections, support and resistance lines, moving averages, VWAP plays, whatever, then I'll send alerts if I'm playing them, and give you kind of a heads up on the thesis. Like, here's what I'm seeing, here's what I think's happening. Robinhood 1794 was a pretty good trade line. And notice we also can't really keep it up right here on the 1794. And so the whole point is just to give you a heads up on what I'm seeing on a trade idea. And so if you want all those alerts, just join the Stocks and Psych course. You get access forever. You get lifetime access to it. So, and there's no recurring subscription. I don't know, I've always had this mindset, and we teach in the course too, like try to stay away from monthly payments. Mostly because I like when people buy real estate, and I think monthly payments kind of tank your ability to buy real estate. See, like, if you go buy a Tesla, so that's why we don't do monthly payments on the courses is the thing. But anyway, you go buy a Tesla at $600, your buying power at $600 a month for real estate is going to go down by about $1,400 a month. So consider that for a moment. You go to a mortgage calculator here, and that's like, what, a $200,000 mortgage? Yeah, that's a $200,000 less of a home you could finance because you got a Model Y at $603 a month. That's crazy. That's absolutely crazy. So, that's pretty wild to me. That's really, really, really wild to me. But that's something to keep in mind if you are thinking about, sort of these monthly payments on cars. I'm not a big fan on that. What's the minimum you could trade? It depends. Some of the trades that I've done as small as $500 on a trade. Honestly, some of the option contracts, which are very risky, like if you go some of the small option contracts. But, we do this fun thing now in the office, and we're going to do it the next time we play Settlers of Catan again, but we started this. So we're on the plane the other day, and we're playing Settlers of Catan, and one person was losing, so they just kind of decided to throw in the towel and to try to take me down, and kind of gave all the cards to the other players to try to take me down. I still won, but what we decided is, if you get last place, you have to buy like $50 worth of options. So like, cheap out of the money options for the winner for the next Friday. And basically it's kind of like you're buying somebody, this option that potentially could go up, like it'll either lose all its value or it'll potentially go up a lot. And so we kind of now force the losers when we play games to buy the other person a cheap out-of-the-money option. And now all of a sudden, instead of doing like a $20 or $30 bet, we're actually doing a $20 or $30 bet that could turn into like $1,000 potentially, let's just say, right? And the whole point is to spite the loser even more. Because imagine if you had to buy the winner, a $50 option that turned into $1,000, you'd be really pissed you lost, and you'd stop, being willing to lose. So it's kind of a funny way to do bets. So if you ever want to do like a $20 bet with your friends, just ask them, put that $20 or take that $20 and put it on like a YOLO call or something. It's kind of funny. Anyway. So yeah. Okay, anyway. So if you have questions, by the way, about the courses, make sure you email us at staff@meetkevin.com. We'll take care of you. The next coupon doesn't expire until tomorrow evening, but tomorrow evening will be here faster than you think. But anyway, AMC is now up 134. We've got GME basically at the good old $69. And then we've got costs here at 44, Plug 65, SunPower 111. SunPower has come down from about 151. So look at that. You ran all the way up to $7.51 over here. You've come down substantially. Bitcoin's going right back to 61.7. It kind of regularly has been. It's been kind of wild over here. And then you've got, Tesla breaking through the 174 doozles over here. A lot of enthusiasm coming through. The Qs are only down 8 basis points after a hot PPI report here. Pretty remarkable. Virgin Galactic's up 31% in the pre-market. And look at BABA over here, 5.2 to the downside. Duolingo bleeding out a little bit over here. This one had a little bit of quite a bit of a run over here. Tops out at about 250 though. Yeah, look at that. You've almost got a triple top right there at about 248 to 250. And sitting right back there at that sort of 180 bottom. Apple's up about 12 bips, big deal. Affirm's not really participating in the momentum movement. Really, it's like sort by short interest, and those are the kind of stocks that are really running here. If you don't have the course, get the course, says Adrian. Oh, thank you for that. And the YouTube stream is on Meet Kevin Live, massive lead. Meet Kevin Live. Yeah, let's look at Home Depot. And let's see here. How did Home Depot do this morning? Home Depot comes in with comp sales at negative 2.8%. The expectation on this, you know what I should do also is I should put out the short interest. We could do that. The expectation on that was negative 2.19. So a little bit of a comp sales miss there. So negative 2.8% on comp sales versus 2.19% expected. Now what I'd like to do really quickly is I'm just going to make a short interest list for May 14th. So if you want to know these, I'm just going to read these off really quickly. We got about 5 minutes to the bell. So this is going to take a second, and I'm going to post these all. SPWR, 95.61%. I've got Beyond at 41%. EVgo, 31%. Plug, 28%. Run is at 24%. Space, 30%. Laser, 30%. Save, 27%. Clove, 13%. I should really put these in order. Fubu, 21%. Carvana's at 28%. And 23% is Tupperware. Rivian's 21%. And then I have Tilray at 14%. Lucid, 31%. And I'll just put this up on screen so you can see it here in just a second. Boom, 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 boom. Okay. So you might not know, but I just do this to consolidate where we're putting all of our research. Like, we don't make any money off doing this. It's really just to consolidate our research, and then, you know, if we put little updates up on House Hack or whatever, we throw them up on here as well, which is somewhat useful. Well, some of the updates. So it's really been useful for keeping people up to date on what's going on with the companies and the startups and stuff. But if you go over here, this is just ehack.com. That's where I'm writing this down. ehack.com. GME 23%. AMC is 19%. Let's throw that in. AMC, 19%. MVIS 25%. And then SoFi is 18. SoFi 18%. Those are all the ones I had written down there. So that way you have those over here as well. So that might be somewhat useful to you. Just in case you want to reference that throughout the day. Then I don't have to read them out like 50 times like I did back in 2021. So that might help. Okay, so the forecast comp sales growth of about up 1% for Home Depot. Operating margin 14.1%. They were expecting 14.1%, but they did reaffirm fiscal guide. So I wonder how the stock's moving. I mean, it's certainly not moving like these other ones, but let's take a peek here. Home Depot down about 2% on the Home Dizzles on that comp sales miss. Yeah. Yep. Oh, DJT. Yeah. DJT is not in the indices. So that might be why I haven't seen that. Let me write it down though. Let's go here. DJT. DJT is I see it as 9.36% short. 9.36% short. All right. So, okay, good. As we go into the opening bell here, quick reminder, coupon code expires tomorrow for all those trade alerts. And you get everything. Like, when I close trades, I just post the P&L. Obviously, I post the actual trade and, like, the amounts of the trades and the strategies on the open and the close. But I also just post the P&L on the daily. So when I close positions, post the P&L. So that way you kind of know what's going on. So it's transparent. Again, it's not a guarantee to make money, but the goal is just be transparent. And last 30 days have been killer. So let's go ahead and get ready for the bell here, shall we? All right. As we go into the opening, we got AMC up 127% at oozles. We also have GME up 111%, 82% on Sun Power. Plug Power at 69, cost 35, top 26. Are we going to get an opening dip? Or are we going to rip at the open? Let's find out.
Isn't it well? They're both very fine companies. They're both very down and very expensive. Go for it. Go forth and conquer.
Let's get a look at the opening bell and the CNBC real-time exchange. And the big board, it is DeWalt, a tool maker, 100th anniversary. Jim's going to talk to the CEO of Stanley Black & Decker tonight on MAD at the NASDAQ. Nano Nuclear Energy celebrating a recent IPO.
Good. Constellation Energy, the third best performer in the S&P.
Okay, it looks here like we got a halt on GME already. And that's a red candle halt right there at 98% on a red candle halt on GME. That was an instant halt. Looks like AMC's got some red candles coming in. 116% to the upside here. 17%. Not halted yet here. We have, GameStop's the only one halted. That's crazy that GameStop's halted and these other ones are not. Plug Power's holding on to that 69. Sun Power's getting wrecked. Sun Power's going to hell over here. Holy smokes, look at that. We just went from $7.50 all the way down, which was about 150% up, all the way down to about 77%. At the same time, Tesla's breaking that 175. Look at that. That's a big line for Tesla right here. 175.6 on Tesla. That's a very important line. Critical. Pay attention to it. Beyond Meat rotating down as well. Plug, we got a red candle there on Plug. Plug, running down. Still halted on GME. Q's about to go positive after that hot PPI read. Crazy. The Q's are about to go green here. Home Depot's only down about 1%. HKD is sitting at 12.67. Microvision, got a green candle on Micro. Tupperware moving down as well. Q's holding on to that red right now. Tupperware looks like it's down about 22. Oh, AMC gets halted as well. Okay, yep, there it is. AMC gets halted. SunPower is only up 69% now. Plug Power is up 59s. Also dropped about 10% there at the open. Cost is still up about 39-40% there. Cost really trying to take off. Tupperware 24%. Getting a little bit of a bleed there at the open on some of these numbers here. Beyond Meat also turning slightly red there at the open. Some selling out happening in some of these. Tesla looks like it's breaking out of the 175. Very good. Look at that end phase run. Holy smokes, it's going right up to that 119 level. Go Tesla. Sorry, and end phase actually, but I was going to say end phase. But Robin the Hood breaking the 1794 number over here. Very, very good. NVIDIA dropping along with Super Microcomputer here. A nice little drops there. Still halted on GME. Still slightly red on the Qs, but only by a couple basis points there. Looks like Lucid's trying to run here. Get a move there on Lucid. Move on Microvision. We've got, let's see here, Clover. How's this? Virgin Galactic rotated down a bit. Spirits continuing to move. Bitcoin, looks like I got a bit of a green candle coming in here. Let me go to the average candles and the minute. Yeah, look at that. We got a nice little rally off that 61.7 line here. It's important to watch. Still halted on GME, though it's usually a 5-minute hold. Oh, the Q's just turned a little bit more red, down about 9 bips right now. Yeah, Lucid's slowing down a little too on its acceleration here, though TUP wants to take off again. Little dicey here. Look at those red candles on Plug Power, down 43% at the moment. Sunrun moving down as well. It's really Tesla's holding on right now. Tesla doing nice. You've got Tesla up about 3% now. Looks like it's going straight to 178 here on Tesla. Enphase 120 breaking on through, and the GME unhalt should start in a moment here. Let's see here. Let's get the NYSE halt times for the trading halts. The first trading halts of the morning here, we got AMC at 1 minute 49 seconds after the open. 28 seconds after the open, you get a halt on GME. Halted after 28 seconds of open, which means we should be seeing, let's see here. We should be getting an open here in about 20 seconds on GameStop. So buckle up right here. We're going to get a big candle here in about 13 seconds. Microvision keeps going, 17-18% now. Oh, come on, GME, let's go. And here it comes. It should be open now. It is not yet. It is still halted. 28 seconds. Oh, there it is. 88%, 92, 94, 95, 93, 88%, 87%. It's a red candle. I'm holding on to 87, 87, 88, 89, 87. Q's still down 2 basis points. Microvision keeps running. Lucid keeps running. What else is going on here? Tesla, 3%, trying to get to that 178. Holy smokes, SunPower's still sitting at that 69 to the upside, but, I mean, it's down from like 150%. Enphase, look at it get stuck right there at that 119 level. That's a big line for Enphase. Does show there's some limit to the run here. Robin Hood starting to rotate down. You've got Apple's up about 74 bips. Q's still red. GameStop goes right back into a halt. And that means AMC should be next. AMC, we are on a trading halt. And this unlocks, let's see, this should unlock, well, frankly, now. Right about now. So give it a couple seconds here to reflect. And this should be on hold. There it is. AMC 107, 106, 105, 104, 102, 104, 102. And did it just get halted again? I think we just got halted. Oh, 101. No, still going. 105, 101. Come on. Which way are we going here? Oh, NASDAQ.
Gained the lead.
NASDAQ up 1 basis point on, did move up out of, oh, there we go. AMC 113. Holy smokes. 113 there on the AMC, 110 on AMC. Lucid, red candle on Lucid. Q's, back to 0. BTC, Omen down. Spirit can't really keep going. Lucid's topping out. Micro's continuing its run. Plug Power continues to bleed. Tesla keeps trying to march towards 178. Come on, baby. You've got First Solar up 89 bips. Enphase lost that 119. Rivian dropping a little bit as well. Robin the Hood moving up. You've got, let's see here. Nvidia's down about 80 basis points. It's fine. Let's see who the big losers are today. And AMC's still trading. It's up about 108. So it's really holding on there. And then you do have, what do we have here? Amazon, 83 basis points. Trade Desk. Home Depot at 56 basis points. Microsoft, 13. Qs are up 3 bips. Led by, Google's in there at 0.3. I wouldn't say it's led by that, but Google's in there. Lucid, there's Sunrun trying to hold on to its 13%. Tesla's giving up a little bit. Starting to get that red candle there on Tesla. AMC's giving up a little bit. I don't know if this is just your early sort of 15-minute part of the trading day where you basically get an opportunity to buy the dip. But this is your open right now, and you're starting to get those rejections across the board on some of these numbers here. Spirit now moving down. You've got Tupperware moving down, and Microvision and Lucid moving down. Virgin Galactic still moving. Sunruns, it's all Plug's trying to come back. EVgo's trying to come back. Beyond Meat's trying to come back. Okay, getting a little bit of a bottoming there. Oh, look at that. Right, trying to go right back to 175 on Tesla. Didn't quite make it to the 178. Trying to get right back down to that line there. Enphase might be trying to get back down to 113 over here. That's a potential trade. The Qs holding on. Really holding on to about 2 basis points there. Home Depot's trying to move up. AMC's now only up 94%. And let's see here. AMC gets halted to the downside. Downside halt on AMC. Okay, we are now about 1 minute away from GME getting released. So let's see here. GME. Come on, baby. We are looking at 30 seconds for GameStop to release. And so we're up about 5 basis points here on the Qs. Not bad. After that PPI report, honestly, we should be down quite a bit. But those revisions were very, very helpful. So be it. All right, we got about 10 seconds to go. 10 seconds to go. Here we go. 5, 4, 3, 2, 1. GameStop, what do you got? Here we go. And we start at 57. And, come on. Is it not going to unfreeze? There it is. Oh, down to 52, 51, going back to 53. That's the stock price. Percentage gain sitting at 71, 72-ish percent gain. Q's now up 12 basis points, 13 basis points. Q's are rallying a little bit here as down to 65% on GameStop. Just 65% there on GameStop. 9 basis points now on the Q's. A little bit of a move down. Microvision keeps going. It won't stop. Can't stop, won't stop on Microvision moving. We've got Virgin Galactic here at 26%. Tesla, a little bit of a bleed over there. Trying to get back down to 61.7 on BTC. 62 now. Oh, GameStop goes right back into the halt mode. Bam, bam, bam. So, a little unfortunate. So, what else do we have? We have, let's see here. Okay, so then you've got Q's, 8 bips. Both AMC, GME halted now. Lucid rotating down. Let's go for the unaveraged for a moment here on Micro. Yeah, Micro's holding on. I'm not seeing much trade there. Lucid 13.5. Q's 10 bips. There's your red candle on Lucid. Spirit, it's only up 5% now. I'm waiting for sort of like the broader kind of like you hit the bottom. Usually you kind of hit the bottom like somewhere in the first 30 minutes. And oftentimes within the first 15. So it'll be really interesting if we can get a bottom here. So I'm watching that on Tesla as well. It should shelf on the 175.60. If it breaks 175.60, there's a soft support at 174. But we'll watch that to see if you're going to get a bleed on Tesla here, if you're going to hold. Hold it. Q's still up 12 basis points here. The Q's are moving. Q's did not care at all about PPI. We do have Powell who starts speaking in about 17-ish minutes. So, obviously we'll be covering good old Powell. Federal Reserve. And he's going to be talking. Where's he talking? What's this knucklehead doing today? He is, let's see, today's the 14th. He's going to be at a moderated discussion with Chair Powell and Der Niederländische Bank, Klaus Knot, the Dutch central banker. So, okay then. That is going to be... the event started. I'll be watching the event. I just got another screen going on here. This is where Powell is going to be speaking soon.
And as mentioned, there's going to be room for questions at the end.
But whatever. That's a little boring right now. Obviously, we'll pick up on that in a little bit. How's our volume check?
Will be managed and asked by Claire Jones.
Yeah, okay. So that's going to be Powell. He'll be over there. I've got my eye on that, so you don't have to worry about it. I'll kind of keep an eye on that. And then we can add some commentary to it as well. The Qs, I mean, you got a crazy movement here in the Qs. The Qs are up now 14 basis points. So at the same time as you've got AMC gapping down, you're now down to just, only 84% up. That's still really amazing. But you got another halt over here on GME, which is rotated down now to 49. You've got Microvision starting to red candle here. Lucid's moving back up. You've got Clover's moved down. Spirit's moved down. Virgin Galactic's holding on to its number a little bit here. Sunrun's holding on a bit. Plug Power. Where's Sun Power? SWPR? No. SPWR? Yeah, that's it. Okay. A little bit of a bottoming process there, potentially on Sun Power. Let's look at that here. Yeah, still getting some red forming there on the. Wow, I am actually shocked about the Qs here. It's got to be like what's leading. I mean, Tesla's back up to 3%. Let's see here. You've got Microsoft still at 12 bips to the downside. Goog's here at 23. Nvidia's 46 down. APL's up 55 basis points. So it's just got to be like the rest of the NASDAQ, the smallers. I mean, I'll try Costco, which is like position 13, slightly green. Things are just slightly green, I think, across the board on the NASDAQs. And so that's probably what you're seeing here. That's really interesting. Okay, so moving again to see our risers and falls. We've got SunPower. SunPower is the one that it's in the lead right now, 54%, and you've got wow. Okay, so GameStop's back. Let's take a look here. It's still red candlesticking. You know, about 55% right now on GameStop. 52% now on GameStop. 53-ish. You still have the halt on AMC, and you still have some survivability-ish here on SunPower. Somebody says costs lost the lead. They were up like 30%. It's still up about 28%, so not a huge lead losser there. Okay, GameStop now back to 60%. Are we going to get a green candle here? Are we bottoming yet? Are we going to get rejected at 43, or are we going to bounce off 43 rather? Nvidia is rotating down a bit. Apple's moving up. Costco's moving up. Costs, it's a 33 now. 62 on GME. Here we go. Okay. The first like hope, glimmer of hope. Oh, nope, never mind. It just literally turned right into a red candlestick. As you see, like a tiny glimmer of hope. It's like, yeah, no. Okay. 52% to the upside now. Microvision capped out at about 26. Lucid's moving a bit. How is Rivian doing? That's the one I want to. Let's take a look at that. Rivian. Let's take a peek here. What's going on with Rivian? Okay, so Rivian's up 7, 6, and then Lucid, we saw them at about 15, 6. Yeah, about 12 minutes to go before Powell and AAPL. Look at that rise on AAPL, 72 bips. Wow. Google up 25. Okay. 14 on the Qs there. So, okay. GameStop's now live and trading. It's alive and well. We got our green candle right here on GME. There we go. So, GME finally deciding it's time to go back. Wait. Is it, though? Is it? No. Yeah, and the highest, let's see here. Options right now at the money. We're paying about $11 on a Friday option. That's crazy. This is some really, really high prices thanks to the vol movements there. That's wild. And some of these now going out of the money pretty rapidly here. So you're looking at now 54% still to the upside. Still a little bit of, honestly, a rough open here for the momentum moves. Not a strong open at all. Could have had a nice, a little bit of a better move here. But Microvision and Lucid, they're the ones that are holding on the best. But Bitcoin just broke 61.7. I see that as a bad omen. It's possible that the market's getting a little gun-shy that we're about to get Powell. So maybe we're waiting for Powie Wowie. And as Powell speaks here, we'll, obviously we'll be able to, how should I say, comment on monetary policy. So we'll see what happens. But, yeah. Okay, so that begins in about 10 minutes. And then let's see what else we have here. Let's see. Rivian sideways. Nvidia is slightly down, but Apple's making up for that. Microsoft and Google's are down. Costco keeps moving. Let's average out these candles. Look at that. That's a nice move there from Costco for helping out the Qs. Up 10 bips there on the Qs. HKD Bled down a little bit as well. 16% on Lucid, 26 here. All right, let's see if there's any other news going on. Okay, so let's see here. So, other news. PPI says rates are not restrictive as small businesses feel pain. All in. Okay, what do we have here? There we go. Okay. Okay, so this is suggesting, all in, the message for the Federal Reserve from PPI is the pain small businesses feel from sticky inflation continues. Yes. I mean, I do think the pain is pretty real for small businesses, especially a lot of employees. You know, people are getting laid off in this market, and they're having a hard time finding another job. It's a bizarre time, because you look at the market and it's at like all-time highs, but then, you know, people are getting laid off. It's terrible. As you can see here, though, BTC, look at this. It's almost riding the 61.7 line. Very, very important number. We continue to go back to that, and we really have a difficult time surpassing and consistently staying up above this figure. So not ideal. Would really like to see, you know, some differences here, should I say. Okay, so then we have, what do we got? 8 minutes to go for... There we go. 8 minutes to go for Powell. That's that. Okay, good. Then what else do we have? Okay, let's see. Let's find out. Okie dokie. So there we go. Okay. Then if I go jump in over here, GME is still halted. SunPower 55. SunPower's really sort of like, feels like it's bottomed out there right at about $4. Maybe yeah, about $4. Feels like where it's bottomed out. Plug Power's trying to come back up. Costs 41-ish%. Costs trying to recover. You were down at 28% here for a moment. You've recovered nicely. Rivian's still stuck at 7. Qs are at 12. Microvision's 26, also capping out. So far, it's been tough to say, you know, yeah, now's the time to buy calls, because everything's either been topped or it started bleeding. So call options have not been ideal. Tesla, nice bounce there. Again, getting rejected. Look at this. 177.86. That's a double rejection right there. People are front running the 178.38 line. Twice now at the same spot. Now, Enphase is bleeding right back down to 113. Very interesting. Okay. Reddit bled out its gains. It was at up 7.5%. It's up 2.5% now. You got Robin the Hood's up 7.5%. And it's still holding on to its gains. Okay. Let's see here. Okay. Let's see what good old Jimbo has to say.
Great for your heart. This is going to put a lot of pressure on the insurers, because that's been the holy grail. If you can get the heart, cardio, not weight loss, because that's viewed as being vain. This is cardio, and that's why you should. Now, Lilly goes down, Novo Nordisk goes up. They're almost the exact same compound, so that's about as stupid as the wood that is sold at Home Depot. Although I have to be careful, because Orient strand board may be smarter than some of the people who are buying these things. But yes, Novo Nordisk and Lilly should benefit. Every time Novo Nordisk does something good, just go buy Lilly. This is a same formulation situation. So anyway,
doesn't the advent of AI on productivity and the advent of these on public health make you somewhat optimistic about the future?
Yes, that's why I say it's 18 months to 2 years, and I just need Jay to place for time.
Yes.
That was my top list, and I was like, look, guys, the cavalry's coming. But, you know, it's...
The cavalry's coming. I don't know. Implying J-Pow's coming is not what you want to start pricing in right now. Q's coming down again a little bit. Moving down to about 7 basis points. I think the market is honestly taking a giant fat chill pill right now because J-Pow's talking in 4 minutes. That's the only explanation I have here. And it's unfortunate because, you know, you had a pretty good move here. You know, you had some really, really cool opens. GameStop's still holding on. I mean, look at that. Look at that. That's nice. That's a good bounce there on GME. That's pretty good. But you had some pretty good opens here. And it's all entirely possible J-Pow is what people are focusing on right now and potentially somewhat concerned over. So we'll see what he has to say. We'll be covering him in 4 minutes. Sitting about 79% now on GME. And you did get a nice discount there on popping in for a moment. We went down to about 45, seems to be about the discount level at the moment. You're still halted on AMC as you do move down. And getting pushed back down again a little bit here on GME. Looks like that 52 line's a big deal for it. We'll watch that. The Qs are losing. Lucid is trying to push up again. Micro and Lucid, those are I'm gonna put a little like asterisk on those. Those seem to be the two that keep trying. They're like Thomas the Train. Let's kind of keep pushing there. 61.7 on BTC. It's magnetoed to the Meet Kevin line. I don't know what it is about those freaking lines, man. They put a line and it's just always playing with the line. I got to talk to Ben Mala again. Ben, what do you think about these lines? Anyway, AMC looks like you had a little pop there. Oh, look at that. Are we getting a bottom on AMC? Is this like a GME bottom? Or are you getting a bottom on AM Sizzle? That's interesting. Okay. And then what about SunPower? SunPower sitting at about 57. GME gets its halt. On the upside, that's an upside halt on GME. And still waiting here for some kind of action from J-Pow. I still don't see him up on the stage, but whatever. And we'll be waiting for him in a moment here. Okay, so what next? Next. AMC's moving up. GME halted. Q's at 6 basis points. Waiting to see what ends up happening here. And SunPower is still pulling down. SunPower not happy. SunPower no bueno. Rivian pulling up a little bit. Hood's pulling up a little. How about Lucid and MViz? Can we get them moving? No. Tupperware. No. Oh, MViz just legged higher. Nice. Nice, and AMC is halted. So AMC, GME just get their halts. And now we are waiting to see what's next. Tesla, bleeding back down. Okay, we should be getting J-Pow now any moment. So yeah, they've got a screen up right now for what looks like a transition. Oh, they're transitioning. Oh, okay. Come on, J-Pow. Where are you, buddy? You're always on time.
By not having it and multiplying yourself as a change agent in your organization.
What?
If you see the same things, obviously nothing will change.
This person keeps talking about being a change agent. Who wants to read all that crap? I don't want to read all that crap on screen. I want J-Pow. Put this crap away. Where's Jay?
Is on assignment. A few moments away now from the Fed chair making some fresh remarks at the annual meeting of the Foreign Bankers Association in Amsterdam. As soon as we get those, we'll get you straight to you. Meantime, markets looking through some of the internals of PPI today. Ran a bit hot month on month, but negative revisions. And one interesting element, as you can see, the 10-year at 4.45, is that a lot of the components that's
Tesla
CPI that we saw this morning weren't that hot. And so there is hope that tomorrow might be as some have argued in the last few days, a friendlier number.
Yeah, and if you look at kind of the read-through to the various sectors, real estate, the top performer, which would suggest that the market isn't as concerned necessarily about rates. You've also got financials in the green, materials, industrials, and utilities, whereas communication is the biggest laggard. Communication services the biggest laggard today, which suggests kind of maybe some profit taking in big tech and other areas of communication services. Interesting in terms of the Fed chair this morning. I know a lot of people in the banking world will be clued in to see if he has any comments, any fresh comments with regard to bank regulation and Basel. Because that has been a key topic of conversation. So this.
Oh my gosh, you're gonna put me to sleep if you start talking Basel III. We know Jay Powell doesn't like this new banking regulation crap. And the guy's like, he's probably backstage pissed off right now because this lady keeps going with her presentation. She's overtime. Get off the stage. You're done. Time's up. Time for Jay Powell. Not this. Ridiculous. All right, whatever. All right, what else? Rivian's trying to go 9% here. Apple just bled down a little bit. Costco's just starting to sort of move down. Microsoft, Google, Nvidia. I still think you've got nervousness because of J-Pow. Still halted on AMC, GME. 0 on the Qs at the moment. Lucid. Envis. Nothing's really like excitingly moving. It's not as not fun. Okay, what's going on over here?
An attorney and investment banker by background.
Oh yeah, we're getting ready to J-Pow. Are you ready to get J-Pow'd? J-Pow to the face. Let's see if he ends up leaking anything for CPI tomorrow. Any kind of trades. Remember, you can get all my trade buy-sell alerts in the Stocks and Psych group. We were going through some of our delicious green P&L for this month earlier in this live stream here. I don't want to have a red day yet. It's been a really good month from anywhere from 20K trades to $800 trades to 500K trade. This has just been crazy. So, it looks like they're going to do a panel. That'll be really boring. But anyway, yeah, if you want all those buy-sell alerts, obviously can't make any guarantees on trading, but I send all my alerts on when I see lines or movements or trends or whatever. Make sure to join those at meetkevin.com. You can join the Stocks and Psychology of Money group there, and we have a coupon code expiring tomorrow. If you have questions, just email us, staff@meetkevin.com. For those of you that joined back in like 2019 or 2020, you can still get the same alerts, which is great. You know, you don't have to pay a single dime more than what you paid back then. There's no subscription fee, which is really cool. But anyway, here's GME. The halt has released. So we are released on the halt. Looks like we're slightly moving up there after the halt. This is the on-average candlestick, so you get a lot of volatility here. It's tough. It's having a little tough time kind of moving there. So watching, oh, here come the panelists. Jay Powell. Look at him. What up, Jay? All right, there he is. There he is. Let's listen in over here.
As a result of higher rates, that it really does force politicians to do something.
Oops, wrong one.
U.S. economics editor of the Financial Times, and I'm here today with President Knut and Chair Jay Powell. Chair Powell, I'd like to begin with you. Could you give us a brief summary of the U.S. economy and where Fed policy is right now?
Uh-oh.
Thank you, Claire. I'd be delighted to. Let me say it's great to be here. Thank you for being here. And Klaus, thank you for this great visit I've had here to Amsterdam. It's a pleasure and an honor to be here. So the U.S. economy has been performing very well lately. We had growth last year of just over 3%, quite a strong year. And it's driven by a number of things. I would point to a very strong labor market where you've got rising employment, you've got rising wages, so disposable income, consumers are spending. Generally, households are in good shape financially. They're not over-levered. And so we see a good picture. Consumer spending has held up very well. As well, business investment has been strong. Businesses are seeing opportunities to invest, and that has helped. I would also point to a fairly large influx of immigration into the country over the past couple of years. And those people are joining the labor force. We're experiencing still a labor shortage in many industries, and so
it's pretty hot
there are
so far.
jobs, and they're going to work and they're consuming, so that's also boosting growth. So overall, a good picture looking at the data so far. The labor market is very, very strong. It was, I think, overheated a couple of years back, and what we've seen is it coming back in gradually into a better balance over the last couple of years. And now I think if you look at a broad range of data, you could say that the labor market is about as tight as it was before the pandemic in 2019, and that's good. Wages real wages are now positive, and unemployment has been below 4% for 27 consecutive months, something that hasn't happened in a half century. So, labor market very strong, and again, signs of gradual cooling and rebalancing, so that supply and demand of workers is coming back into balance, just as we would want. Inflation, it's worth starting with the fact that on a 12-month basis, headline inflation got as high as 7.1%, is now down to 2.7%. Core inflation got as high as 5.6% and is now at 2.8%, so it's down by half. That progress, though, really happened over the course of last year, and particularly the second half of last year. The first quarter in the United States was notable for its lack of further progress on inflation. We had higher readings in the first quarter, and higher than we expected. We did not expect this to be a smooth road, but these were higher than I think anybody expected. And so what that has told us is that we'll need to be patient and let restrictive policy do its work. If I turn to the outlook just for a second, I would say we expect continued growth, 2% or better. We expect the labor market to continue to be strong, but to move further and further into balance. And I expect that inflation will move back down on a monthly level, on a monthly basis, to levels that were more like the lower readings we were having last year. I would say my confidence in that is not as high as it was, having seen these readings in the first 3 months of the year. So we're just going to have to see where the inflation data fall out. And I'll stop there with the economy. Thanks.
Wow.
Thanks very much. We'll be digging into some of that later in the discussion, but now I'd like to turn to President Knut.
A little hawkish there. I mean, it's not bad. It's not like he's suggesting, oh, it's horrible. He still expects inflation to come down towards the second half of the year. His confidence gone down a little bit. Nothing about rate hikes here. Okay, kind of, it seems somewhat neutral, but neutral to slightly hawkish is what I would say.
The signs of recovery are clearly there. We started off the new year much stronger than we had expected.
How much do we want to listen to Nod? I don't know, because we could also just, in the meantime, jump on over quickly and just listen to or take a peek here. We've got AMC at about 96% right now. It's about 10.15. GME is still halted. Q's have been a little volatile there, sort of fell as Powell got ready to speak and started rising again a little bit. We're only at about 4 bips right now. AMC's trying to move up again. Oh, smidgen of a move there. Trying to get some moves. We'll see how this continues to shake out. Microvision did just have a little bit of a heart attack, and so it's dropped about 5-ish%. You've got Bitcoin under the 61.7 line, which isn't great. Look at that. Tesla breaks the 175, and Enphase is going back down to 113, it looks like. Anyway, so we're waiting to get a little bit more here on Powell. He's not talking right now, though. It looks like CNBC is also, I think they're replaying what we just heard.
Boosting growth. So overall, a good picture looking at the data so far. The labor market is.
Yeah, this is CNBC's way behind. This seems to be pretty accurate right now, but just confirming.
Balance over the last couple of years. And now I think if you look at a broad range of data, you could say that the labor market is about as tight as it was before.
Yeah, that's redundant because we already heard that. We're here now. This is live.
We know that such reallocation is very productivity enhancing. But in Europe, we chose a different approach. We chose an approach that was focused on job security. The governments essentially took over the wage bills of the firms. And as a consequence, we froze the supply side of our economy for a couple of years. Then during this period of stagnation, there was a...
All right, we're just want to see, why are they so behind?
It's worth starting with the fact that on a 12-month basis, headline inflation got as high as 7.1%. Is now...
Yeah, no, they're like 4 or 5 minutes behind there. Anyway, doesn't really matter. We're kind of wait to see what's going on here. Watching Tesla, 1.88%. Plug Power's got a little bit of a bleed. Trying to see if I could find... Bitcoin's still moving down. 61.4 right now on BTCs. Let's see here. What else? Qs, 6 basis points. Okay. AMC, GME, somewhat back. Both are unhalted. GME is at 80%. AMC's at 101% right now. So watching these. Let's see if we get a question here for these folks.
Mainly on the back of goods and food price inflation that is coming down. Services inflation has been resilient for a while, but we're now also seeing the first signs of improvement there. And that has everything to do with a slow but gradual moderation of wage growth, which is quite essential, I think, also going forward in making an assessment of inflation risks. But all these developments clearly point toward further disinflation. Also here, an intriguing question is, of course, is there more similarity or are there more dissimilarities with the development in the US?
Mm-hmm.
From the onset of the inflation shock, it was clear that the balance of root causes between, let's say, positive demand shocks and negative supply shocks was different in Europe from the US. The US had a much stronger demand component. I think we had a much stronger supply component. Yet at the same time, there was a remarkable synchronicity if you look at the development of action.
Okay, I'm just going to pull off here for a moment. Just watch BTC here. 61.3 kind of keeps bleeding a bit here. A little interesting. Sunrun up about 9%. Also a bit of a bleed there on Tesla. Can't get back up over that 175 line. And continues to bleed down. DJT's up 4%. $54 right now. Intel's up about 1%. Watching some of the AI plays down about 0.5%, relatively nominal. You've got Etsy at about 3% here. Pretty nominal as well, as we wait for Powell to start yapping again. Okay. So, let's see. Okay, Q's still green. Still green on the Q's. Okay. What else? Come on. Well, this guy's talking forever. Powell's just like, get me out of here.
Labor market coming out next week. The triangulation between wage growth, productivity growth, and profit margins, which is important. Then we will have new projections. And I'm confident, again, that if they confirm the picture, as I just sketched it, that June will be a good opportunity to make a first move in removing restriction.
Okay. Very clear hint at June there. We'll come back to whether we could see further moves in July too. But just to draw on some of your comments there, you seem broadly confident that inflation is going to prove less of a problem in the Eurozone than it seems to be at the US at present. We've seen quite a reasonably high PPI reading today from the US, Chair Powell. Some people have said that looks hot. What do you think of today's reading?
Revisions.
More broadly,
here we go.
Is there a risk that inflation becomes a lot more of a problem in the US than it is elsewhere?
Here it is.
So we had a producer price index reading just a couple of hours ago, and I would say it's actually quite mixed. The headline numbers were higher, but they were backward revisions, and we're of course disassembling it, taking it apart, and looking at it. And I think markets and analysts are looking at it as I wouldn't call it hot. I would call it sort of mixed. But in terms of the overall picture for inflation, I think you have to go back to last year, where we had historically fast disinflation. Inflation came down by two full percentage points last year. Why did that happen? It's really two forces working together. One of them is just the reversal, the unwinding of the pandemic-related supply and demand shocks. So that we thought we would always get that. We thought we'd get it in 2022, and we didn't, and then it really arrived in 2021. So that was a big part of this, was just the reversal of distortions really to both supply and demand. The second thing is just restrictive monetary policy, and restrictive monetary policy cools the economy and makes room for the supply side to heal, but also lowers demand and ultimately lowers inflation. So I do think those two have been working together. And the question you ask is inflation going to be more persistent going forward? I think, and that would essentially mean that we've gotten the supply side gains that we're going to get, and now it's down to lower demand, which would take longer and potentially be more painful. I don't think we know that yet. I think we need more than a quarter's worth of data to really make a judgment on that. We know that there are still businesses still report that there are shortages and labor shortages and things like that, which are now being addressed. In addition, even when the shortage is alleviated, there should be lags before that shows up in economic activity and inflation. So there may be some more there. I don't want to give up on it yet at this point. I also think that having restrictive policy, we have the highest interest rates in some time. I think that it may be that takes longer than expected to do its work and bring inflation down. I am confident that we will do that, but that we will get inflation down to 2%, and ultimately we will do what we need to do with our policy rate.
And just to bring in a question that one of our members of the audience
I didn't like that line. I don't want to give up on it yet. It kind of implies that he's thought about giving up and maybe saying we need to raise rates again. That's weird.
% target will not be possible with the current level of the Fed funds rate.
So I think, as I just mentioned, I do think it's really a question of keeping policy at the current rate for a longer time than had been thought. I think by many measures, the policy rate is restrictive. The question is it sufficiently restrictive? And I think that's going to be a question that time will have to tell. Entertain the possibility is, that could be a very small probability, but I have said that I don't think that it's likely, based on the data that we have, that the next move that we make would be a rate hike. I think it's more likely that we'll be at a place where we hold the policy rate where it is.
And is there any particular component of inflation that concerns you? A lot of people in the US have been focusing on housing and that segment, but is there that, or is it something?
Good questions, by the way, from her. I like this.
3 buckets, the first of which is just goods.
No, not again, J. Powell. You do this every time.
It was negative for 25 years, mildly
Goods.
negative because, of course, globalization and many goods were manufactured elsewhere and shipped at lower costs. So
housing services,
that, I think,
non-housing,
is performing broadly as expected over time. We had very high goods inflation at the beginning of the pandemic because of the supply chain issues. That came down a lot, and I think we expect that. Housing inflation has been a bit of a puzzle because current rents have been low. Current rent increases have been low for some time, but they're not showing up. That's not showing up in rollover leases and in owner's equivalent rent. So, I think what we've learned is that the lags between a decline in market rents and it showing up in the measured inflation for housing services is long. Their lags are longer than we thought. But as long as market rents don't go, as long as they're going up at very modest levels, it will show up. It's just a question of when. I think our estimate of the lags is there. And so you've got to look at that. That may affect your confidence, but we have to wait for it to happen. In terms of the biggest part of it is services inflation, non-housing services, and that's more than half of the index. And it's less interest sensitive. It's very sensitive to wages and that kind of thing. We had made some progress there, particularly if you look at the market-based aspects of it. But that's the one that I think may take the longest. At the same time, it doesn't need to go to 2%. It wasn't at 2% before the pandemic. You need the 3 of those to come out in some way that they're at 2%. And I'm confident that we will get there.
Excellent. And just to go back into this theme of divergence, I mean, to summarize your answer, it seems that, you think the geopolitical aspect of Europe being closer to Russia, and also the aspect of not only the scale, but the design of the fiscal response, are the primary drivers of this divergence that we've seen between the US and Europe. Chair Powell, what would your thoughts be on this? Are there other factors that you think are worthy of consideration when trying to understand why the US and Europe seem quite different economic beasts at the moment?
So I agree with all of the factors Klaus laid out. I would add we're probably also benefiting from a sort of strictly accounting GDP standard from new workers coming in to a large extent. I think the issue really is, and this is an issue that that the European economic policymakers are very, very focused on right now, is over the longer run, Europe's productivity growth has been about half of the U.S. And so ultimately all you've got is hours worked, and that's largely a function of population, hours worked and then output per hour. That's going to be your economic activity and growth. And so productivity is really the thing that can enable living standards to rise over time. And there are a lot of theories on why that might be. I think from an American perspective, I would tend to point to the more flexible labor market, and also a more fully built out set of capital markets, which is parts of which are very focused on funding early stage innovative companies. So it's not just a bank-centric system. We've got a very highly evolved financial system. That may be another factor.
Yeah. So plenty of other reasons there that are worth mentioning, I think. Turning back to you, President Knut, you gave a pretty clear signal, I think, that we're going to see a move in June. But a lot of the questions that people have put to us today have, stressed this point of, usually there's been this sense that the ECB has been following the Fed, and it's raised a bit of a question mark as to what degree can the policies of, the two major global central banks, with apologies to the Bank of England, how much divergence can we really see? So, to what extent do you feel constrained by what the US central bank does, and would you perhaps be reluctant to cut in July should the Fed want to stand pat and leave rates as they are for the foreseeable future?
Look, I think if you talk about monetary policy of big central banks like the Fed and the ECB, that monetary policy always takes place in a global context. I mean, our markets are...
I have to say, I don't. That didn't really sound like horribly hawkish, especially since Powell basically just washed the fact that non-housing services don't actually have to be at 2%. That could run hotter. He's basically saying, like, if you average 2%, because maybe you have a negative on goods, and then of course the way they're weighted or whatever, it actually ends up being okay. I think once you kind of clear JPOW here, you could end up having actually a move to the upside, assuming you don't get like a bad CPI report tomorrow. You get a bad CPI report tomorrow, bets will be off on that. So we'll see what happens there. But still, you're getting a little bit of excitement there on BTC again after those comments there from JPOW. We'll see what else he has to say. Let's see here. Yeah, the Qs shot up right after that. You can see that here. You've got the Qs up about 21 basis points. Spirit Airlines up about 8%. Robinhood's up about 9-ish%. Costs up 38 bips. Costco, Apple 32. Nvidia just went positive. So after this, you did see Nvidia, Google, Microsoft. They were all waiting for JPOW. You do have halts on AMC and GME. Microvision still sitting at 26%. Lucid's at 13%. Tupperware is over here at about 27%. Sunrun's 8%. Sunrun's bleeding out a little bit. Tesla's getting rejected by the 175. Enphase basically pulled down to about 114, 115 over here. Lemonade's bleeding out a little bit. So you've got a little bit of bleed going on here. AMD turns green, SPY turns green, Trade Desk down about 142, and looks like, yeah, you continue, look at that, you continue to get a move here on the Qs. Qs keep moving up. That's probably because you're actually now starting to see a little bit of a run here on an NVIDIA, and so we'll keep an eye on this, as well as Apple and some of the others, as the market, moves here. Microsoft here. I do think we're going to get back to JPOW with some more questions in just a moment, so we're going to watch for JPOWy Wowie as he comes back in just a moment here. So let's listen in here again for a moment.
Contractual wages are coming down, but one of the problems now is that we have negative productivity growth in the
also what I'm doing is I put a full summary of everything that was said over on ehack.com, as long as the cache refreshes. You might have to refresh your browser, but once that cache refreshes, I think you should be in the clear there. But yeah, you can kind of see a summary of what was said so far over there. And we'll do a little video review as well in a moment, but we're not done exactly here yet. Let me see. Do we have news here? What's going on over here?
What did Biden say about these tariffs 4 years ago?
I'm also watching to see if Jay Powell's talking. He's not yet.
Of them. I'm curious what changed over the course of those 4 years and what this means for the election come November.
He's got an interesting history, right? He was a free trader like many in both parties that now have shifted thoughts on that. When President Trump was in office, the pushback was really that these tariffs were way too widespread, that it was going to hit the economy and it was going to hurt American consumers. So what the White House says about that now is that they specifically really narrowly chose where these tariffs would be hitting so that it shouldn't hit consumers writ large. If you're out buying solar panels for your house, if you're looking to buy an electric vehicle, you might feel this. You might feel this once these tariffs kick into effect in the next few weeks, but they say that writ large, this is more about protecting U.S. manufacturers, and that's the most important thing right now.
Earn that one way, and that's by achieving our mandate for the benefit of the public over time. And also, I would add, a part of that is sticking to our knitting. Don't take on politically fraught issues that are really not our mandate. Do your job and explain as best you can what's happening in the economy. Of course, the economy the post-pandemic economy has surprised everyone. I wouldn't single out any single central bank or group of forecasters. It's just been many things that were not supposed to be able to happen have happened. Nonetheless, we've made real progress on inflation. We're far lower than we were. I would say the risk that at the beginning we were very concerned that the very high inflation we saw might be quite difficult to bring down without a kind of very significant decline in employment and weakening economic activity. That didn't happen. That's just a great result. I think people are unhappy. You mentioned people are unhappy. That I fully appreciate that. And a big part of that, I think, is go to the store. Prices are high. You tell people inflation is coming down, and they think, I don't understand that. The price of all the things that I buy hasn't come down.
Right.
So, they're not wrong. I mean, they're suffering. Particularly people at the lower end of the income spectrum are very hard hit by inflation from the start, which is why we're so strongly committed to restoring price stability and keeping it in place as long as possible.
And just to turn back to Europe now and to the Netherlands in particular, we're sitting in a venue here that's really testament to the power of trade, for good and ill. In an era of deglobalization, when we're seeing daily headlines about tariffs, and how does the Netherlands as a small open economy, and indeed the Eurozone as a very trade-dependent region, really thrive?
Yeah, that's a difficult question. I mean, it goes beyond saying that this is a development that is absolutely not a positive development for the euro area, and that we watch with a lot of concern. Now, fragmentation is there. The train has left the station. So, we have to think about sort of the ways that it can manifest itself and what we can do to try to best redress its consequences. There is a sense that international business is actually, to some extent, more resilient to political fragmentation than we have been thinking beforehand. So that international trade is a little bit like a river that sort of tends to find its way, even if some obstacles are being raised here and there. But of course, the fragmentation, it impedes the diffusion of technology across borders, so that means lower productivity growth everywhere. I would also not underestimate the limitations that it puts on our capacity jointly and internationally to solve global problems. In a fragmented world, suppose we had a global financial crisis again, like in 2008, 2009. It would be much, much more difficult to get the G20 around the table and to agree on a concerted remedial plan as we did in 2008, 2009. Think about climate change, etc. What can we do about it? Well, I think in Europe there is still a lot of untapped potential to at least strengthen our internal cohesion. we're not tapping the full potential of the single market. In many, many places, the single market only exists in a name. We don't have capital markets union. I think we are really doing ourselves a disfavor. We don't have a banking union yet. And so we are missing out on opportunities to strengthen international trade, or sorry, inter-European, I should say, trade and integration, economic as well as financial.
Would you have anything to add on this topic? I know it's something that's featured in the Fed minutes about the links perhaps between trade barriers and inflation and so on. Do you see it as a risk?
So this is a very, very hot political issue, not just in the United States, but everywhere in the world. And not trade policy, of course, not the job of the Fed. So, I mean, we, as I mentioned a few moments ago, I think we need to resist the temptation to just have opinions on all different kinds of economic policies, as fun as that might be. You know, the elected government has to deal with these things, and they have to deal with the public on them. And they've given us really important assignments, and I think we need to honor the decision not to give us that.
And I appreciate this is also an awkward topic, but it is deficits in the sense that the national...
Deficits are an awkward topic. Hey, you're out of money and severely in debt. Let's talk about it.
Trickier as Fed President, Fed Chair rather too.
I don't think it's not that it makes my life more difficult or the Fed's work more difficult, but I think it's you know, utterly non-controversial to say that U.S. fiscal policy is on an unsustainable path. Not that our fiscal position itself is unsustainable, but the path is unsustainable, meaning that we have full employment and we're running big structural deficits, and it's, you know, we're going to have to deal with this sooner or later, and sooner is a lot more attractive than later. I do hear from elected people on both sides of Capitol Hill and in both political parties that they do understand this. Mm-hmm. And I think you mentioned the Congressional Budget Office. I think everyone should be reading the things that they're publishing about the U.S. budget deficit and the path, and should be very concerned that this is something that elected people need to get their arms around sooner rather than later.
And you've noticed a lot, you've noted a lot that these supply side benefits that you thought might come in 2021 or 2022 did actually arrive in 2023. Now, what sort of benefits from the supply side do you think we could see in 2024 and beyond?
So I think we probably have realized most of the reversal of the pandemic supply side effects, but not all of it. But I think we could get more sort of the final parts of the supply chains really getting sorted out. As I mentioned, the surveys of businesses, they still say there are shortages. They still say that they have a hard time hiring people, for that matter. So I do think we're still getting very substantial numbers of people coming to the country and going to work. Let me add, immigration also not a policy that the Fed works on or has opinions on, but I'm just giving you the straight economics of it. People come in, they can get a work permit, they are getting work permits, and they go to work and they're paying taxes and they're creating economic output, and there are millions of them. So it's alleviating the labor shortage that we had in the industries that really had it the worst. So I think all of that, it probably helped at the margin a little bit in cooling the labor market off. It's both supply and demand, but we think at the beginning, in the longer run, it should be neutral on inflation, but in the short run, it might have been positive. So I think that's a factor too.
And just to kind of turn to these like broader demographic trends, there's been a lot of talk in recent years about how they will impact inflation, whether they have some sort of impact on R-star, the kind of, the Goldilocks level of interest rates in the longer term, one might say. I mean, how do you think about these kind of longer term demographic trends and other factors and how they're going to influence where you see this kind of magical Goldilocks neutral rate of interest?
So the R-star, for those of you who aren't central bankers who read every word of every story Claire writes about us, R-star is really a longer run concept. R-star is a neutral interest rate that would neither push up on economic activity nor bring it down at some hypothetical future time when we're at full employment, we're at 2% inflation, and there are no shocks hitting the economy. So think 5-6 years down the road, there's this sort of nirvana out there. Its relevance for current policy making is kind of limited, and I think you need to say that. Really what we're doing in an FOMC meeting is we're looking at the broad effect of the things that we're doing on the economy, and we're asking ourselves, is policy tight enough? Is it too tight? We're looking at what's happening in the economy. We're thinking about lags, and it's not a debate over the level of R-star, because that's a longer run concept. Now, and the argument is made that R-star will go up, and this is a debate that economists have been having for some years now. But the idea is, between deglobalization and the need to fund the energy transition, and perhaps the need to spend more on military and the aging of the population, bigger deficits, higher, all of that could push up what is a neutral rate. And I think those are interesting debates to have. But ultimately, we're not sitting around wondering what the longer run neutral rate is when we do policy. When we make policy, we're thinking today, is our policy delivering what the economy needs to move it toward the mandates that Congress has given us: stable prices, maximum employment.
So would you divorce it? I think why this has come into focus, if you like, is because now that cuts are being considered in some parts of the world. At least there's this sense in which people are thinking, how low will rates go? Would you see that as part of the kind of R-star debate, or would you want to divorce the two factors of this current cycle and where R-star will end up being?
I think the R-star debate runs in the background, but again, it's a longer run concept. You could, if you wanted to think about a shorter run R-star, that would be more relevant. But that's not the way we think about it. We think about the effect of the things we're doing on financial conditions more broadly and on the economy. And how is it affecting the economy, and why? And all of those things lead us to believe at this time that policy is restrictive, and that it looks like it will take longer for us to become confident that inflation is coming down to 2% over time.
And how is this debate occurring around the table in Frankfurt at the ECB about longer run interest rates, or even, where are we going to end up? What's the rock bottom for this cycle?
Yeah, I mean, that's, of course, a difficult question to ask, because there are so many moving parts here. But what I would say is that if you look at the likelihood or the likely nature of the shocks that will hit us in the future, we came out of a period in which we had globalization, which was a slowly moving...
The Qs are vomiting right now. I don't know why.
It's for ever lower prices coming from the rest of the world, which meant that for almost 10 years, we continuously had to approach our inflation target from below. We had a low inflation problem. Going forward, with fragmentation, with aging of our societies, in my view, it's more likely that the shocks hitting our economy will actually be of the nature of negative supply shocks, not positive supply shocks. And if you think that through, that means that probably we will have to approach our inflation target more often from above than from below. And that probably suggests that we are not, at least I don't regard it very likely, that we will move back to the time in which we had a continuous sort of a fairly persistent low inflation equilibrium with very, very low interest rates. We probably have to, on average, run a slightly tighter ship because of the nature of these shocks that are currently relevant to our economy.
And just to come back to something that I think has been kind of in the background here for quite a lot of the discussion about high interest rates taking possibly a while longer to have the desired impact on some pockets of the economy. How do you see that? Is this a legacy of this very low interest rate era? And how do you really address that when it comes to monetary policy? That is there just going to be this lag from now on that didn't exist, say, relative to pre-2008?
So I think if you look at the bigger picture, we've seen the labor market's a good place to see this. You've seen demand for workers cooling off pretty substantially. The ratio of vacancies to unemployed people, for example, has gone from more than 2 to 1 to now 1.3 to 1, and it was 1.2 before. So that's a decline in demand. That's demand related. You also see wages coming down. You see quits coming down. So I think that tells you that policy is probably restrictive. I think it's also fair to say, though, that the U.S. economy is different this time for a couple reasons. One is that people financed themselves into very low rate mortgages, and now they won't move because they would be moving into a higher rate mortgage if they did, and they would be throwing a lot of value away. The same is true of businesses, many of which
this time is different.
Have termed out their debt, and so they're not feeling the effects of interest rates. So it may be that policy is hitting the economy not quite as strongly as it would have if those two things were not the case. Notwithstanding that, I think the overall picture still is policy is working. It's weighing on spending. It's weighing on interest-sensitive spending, and it's certainly weighing on the labor market. It's a question of restrictive policy. As I mentioned, our policy is the highest it's been in quite some time. The rate is, at 5.25% to 5.5% is high relative to recent history. So we think that it's probably a matter of just staying at that stance for longer, and that's how we're thinking about it.
And I mean, you note about housing and about the standard model in the U.S. being I think I'm right, the 30-year mortgage is kind of the standard mortgage product. I think here in the Netherlands, flexible rates are quite more fixed rates.
Yes, absolutely.
So fixed rates are quite common too, but I imagine with shorter
10, 15,
duration.
An average mortgage, I think, has an average maturity of like 16 years. Of course, that's a little bit endogenous because of the low interest rate period we had for so long that, of course, mortgage holders tended to extend the maturity. So now, lately, it's been coming in a little bit. But still, we have a lot of fixed rate borrowing in the Netherlands, and that has, of course, also mitigated the impact of the monetary tightening, which has been stronger in those areas where there is more variable rate borrowing. But in general, I would say 85% of all financial intermediation in the euro area runs through the banks. So when you look at monetary transmission in the euro area, you have to look at credit. And credit growth has more or less come to a halt. As a consequence, we increased policy rates by 4.5% within 14 months. Credit growth came to a halt. That was a feature of the policy, not a bug. And credit has been flat.
Feature, not a bug.
And now we're also beginning to see the first signs of life again. Now that there is an anticipation that our next interest rate move will be a reduction of rates, you also see the first signs of recovery in credit. So in that sense, I think this is more or less how you would expect monetary transmission to take place in the euro area.
And how much of an issue has that been for you in the US, where we do have this, where capital markets play a far greater role, and where, for reasons that were never quite clear to myself, the turn of the year, the markets were predicting, 6 interest rate cuts by the Fed, and pricing credit off the back of that, and there being quite a big, quite substantial growth in lending and refinancing over the first couple of months of the year. How much more difficult does that really make your task that the banks aren't as big a vehicle?
For what it's worth, it's a minority of intervention, but banks are still important, and particularly for small and medium-sized businesses that don't have capital market access. And credit has been tighter for some time now, particularly in the wake of the turmoil we saw earlier last year. But still, credit growth has been modest, and that's another sign of tight financial policy. So that's part of the picture. I think the fact that we have capital markets are so important for many consumer loans of various kinds wind up in the capital markets or securitized and are not held by banks. It's just it's a very healthy credit machine for people, but they're feeling these higher. Those are short-term interest rates. I think that the ones that are longer-term interest rates are the ones where they're not feeling it, and that's really mortgages, and that's companies that have turned out their debt. I think other forms of consumer debt are short-term, and the surveys show that people think it's not a good time to buy durable goods like cars and washing machines, and the reason is it's a floating rate loan at a very high level.
Yeah, absolutely. And when you look at the banking system as a whole, you know, we've seen some jitters, I think, on both sides of the Atlantic, but you know, on the whole, it seems both systems are relatively stable despite, you know, quite substantial rises in interest rates. Has that surprised you at all? Maybe first to Chair Powell and then to President Knott.
Has it surprised? Not really. You know, our banks are particularly our large banks are, you know, strong, well capitalized.
They're on the banking segment now, which is a little on the boring side. I think once he gets off the stage, you kind of clear for a bullish catalyst, but we'll see.
Why the recovery broadly around the world from the pandemic has been strong as opposed to the one from the global financial crisis is that the very large financial institutions came through just fine. The U.S. banking system overall is in good shape. Banks are making loans, as I mentioned. Credit conditions are a bit tight, but that's part of our policy. So I wouldn't say I'm surprised. I think you know, we obviously had a period of turmoil early last year, and we acted pretty quickly to stem the turmoil and also to, you know, to go to work as a supervisor and make sure that banks had good plans on liquidity, had capital, understood the portfolio losses that they have for longer run securities, and are in a position to understand and manage those.
Well, I think it's pretty clear that if you have such an unprecedented rise in interest rates in such a short period of time, that this constitutes a massive shock to the financial system. So when we were sort of in the process of tightening, of course, this was sort of enhanced monitoring, an area for enhanced monitoring. Now, I think we can say, so far, so good. I entirely agree with Chair Powell that the core of the financial system has held up quite well. And I think this is in part, I think the success of the financial reform agenda that was rolled out after the global financial crisis under the aegis of the Financial Stability Board, which was very much focused about stronger capital, stronger liquidity, stronger risk management at the banks, which were at the core of the financial system, and that has clearly paid off. Now, there have been some idiosyncratic accidents here, the second-tier US banking system, Credit Suisse, but I think there were idiosyncratic factors behind it. The banks that arrived into trouble in the US were not even part of the Basel III arrangement and the financial reform agenda. But I would say so far, so good. The question marks today are much more in the non-bank financial intermediation space, where we have seen a couple of quasi-near-miss accidents, I would say. The Dash for Cash, the LDI, the Archegos, the commodity traders in February 22. So these have all been pockets of vulnerabilities where you saw a combination of excessive liquidity mismatches combined with pockets of hidden leverage that we were unaware of before. And that is now also front and center of the work program of the Financial Stability Board, much more the NBFI space. Of course, we have to learn the lessons from the few banking failures that we did see, and that is continuous.
Oh yeah, just a few banking failures, don't mind them.
My main focus is more on the NBFI space than on the banking space.
We'll come back to Credit Suisse because I know that's a topic that you've spoken about quite a bit, and a few of our audience have got questions on that. But non-banks, would you share that, you know, that sense in which they're the big lurking danger in the financial system right now?
I guess I would say it this way. In the U.S., non-bank participants by non-banks in lending activities, for example, has been growing very, very fast. And it's a fairly new thing, and in many cases, whole markets are being now taken over, or now majority for non-banks. And so our job is to monitor that very carefully, because I'll say a couple of things. One, there hasn't been a downturn yet. You worry about very fast growth in anything. It just kind of raises financial stability questions, and you wonder, is it a bubble? What will happen when will it deflate, and that kind of thing. And so you want to be watching it carefully. I will say, though, it's different. You know, some of the we've spent a lot of time looking at it. I would just point to a couple things. One is Many of the lending structures are not subject to run in the way that banks have traditionally been. The funding tends to be from limited partners who have their investment locked up for many years, and they can't get it out. So as opposed to the danger with a bank can be that all the depositors want their money at the same time. And that's the traditional problem that we've been trying to solve with bank regulation for hundreds of years. But these are different. They don't have, and runs are responsible, bank runs or things like that are really responsible for an awful lot of the problems that happen in one form or another. So the non-bank financial sector doesn't have that as much. Another thing is the ties between banks and the non-bank financial institutions are substantial and growing. So there's plenty of monitoring for us to do there. It's not obvious to me that at this point that it's a net loss to financial stability, but I would say our jobs are to monitor it very carefully and thoughtfully and understand the implications.
And just to return to the topic of Credit Suisse, we had a question submitted ahead of the event. In your keynote speech at the 7th Annual Conference on European Systemic Risk, you talked about events surrounding Credit Suisse. What can the Foreign Bankers Association, to which we're speaking today, and the Netherlands Bank learn about the collapse of the Swiss lender?
Well, I guess the main thing one can learn about the collapse of Credit Suisse is the huge importance of governance, governance within financial institutions, because it is pretty clear that the events that led to the failure of Credit Suisse were not sort of a classic lack of capital or, let's say, too much credit risk relative to the capital. It was management failures, there was outright fraud, there were misinvestments, there was misbehavior, even at the top of the institution. And if you have a series of governance failures at an institution, it will lead to an erosion of confidence. That erosion of confidence will lead to deposit runs, which, by the way, already took place much earlier than March 23. There was already a significant outflow of deposits.
Quick note, I'm pretty bullish on J. Powell getting the hell off the stage, because so far everything he said has been pretty bullish. And I think there's a chance we rally into the close. If you're in the Stocks and Psychology of Money group, I sent out an alert on some trades we're doing. If you're not in that yet, join. Coupon code expires tomorrow. Email us at staff@meetkevin.com if you have questions.
In the Dutch context.
Yeah, of course, there was a case where AT1s have been completely written down. So I think it behooves us to look a little bit deeper into this issue, why the AT1s were drawn down, whereas equity was not fully written off. This was, by the way, completely in line with the contractual provisions of the AT1. There was just that not all investors had really read the contractual provisions, so they pretended they were surprised by it. But I think from every case, I think we should try to draw some lessons. But in this case, at least, it allowed the authorities to write down 16 billion Swiss francs, which was helpful to generate the interest of UBS to actually take over.
And now turning back to you, Chair Powell, we've got a very nice question here from Liu Zhan from ICBC, who asks, during COVID, the Federal Reserve applied high levels of monetary stimulus to further raise asset prices and support growth. Bloomberg called you Wall Street's head of state as a reflection of how strong your actions were on asset prices and how profitable your actions were for Wall Street. How does that make you feel?
Don't ruin this, J. Powell. I want the green to continue.
Of hindsight.
It makes no point of contact with the way I remember those days, so whatsoever. So I would just say this: if you put yourself in the place where we were in March of 2020, no one knew how long it would take to have vaccines. No one knew whether millions of people were going to die fairly quickly, or how long the economy would remain closed, or was it even going to be possible to reopen the economy if it had to be closed for a year? What was that going to look like? So I think it was it was so uncertain that I came to the view, and my colleagues did too, that we really needed to use our tools in ways that we hadn't before. Because I would never have been, if things didn't work out, I didn't want to, if we had to go through a really deep, lengthy downturn, I would not want to have to explain why we didn't do that. So we did, and what happened is we announced these very aggressive, vigorous programs to support markets that we had never had to support before, the municipal market, corporate debt, these were red lines that we said we'd never cross. But the thing is, when we made the announcements, the markets healed themselves. So we made very, very few loans. We had something like $6 trillion in lending capacity. So the announcement effects of the things that we did, it really worked this time. So I think broadly speaking, that the initial response was very successful and involved ultimately very, very little in the way of actual lending, a lot of announcements. Then the story goes on, and you have the reopening and the inflation, and we're still living through that. I think we'll have to judge that from a greater distance.
Anything you'd do differently in retrospect?
There's nothing I would do differently in the initial response. I think we did very well, and I think that the world continues to benefit from the strong response that we took, and we really avoided an awful lot of bad tail risk there that could well have come due. Again, I would say on inflation, when inflation kind of unexpectedly arose in the first quarter of 2021, I think we're going to need to, I've tried to resist reaching, conclusions about that episode until, it looks so different now than it looked a year ago, for example. All the progress we made in 2023, I think we're talking about it in a completely different way now. I think 2-3 years from now, we'll be doing the same. So I don't want to try to learn lessons, in the middle of the story.
Sure. I think that's very fair. And another question here that's just been submitted from Abir, who asks, is Chairman Powell confident about the degree of independence of the Federal Reserve in relation to the executive branch of government? Do you think you have the powers that you need to defend your independence?
Yes, without question, I do. I think when, I talk to elected representatives in both political parties in the House and the Senate, and I think there's very strong support on both sides of the aisle, on both sides of Capitol Hill, for an independent Fed. I think people do understand that we're just there to do our job on a non-political, non-partisan basis. Nobody's perfect. Everyone makes mistakes, but the Fed is doing the absolute best we can with the tools that we have and the understanding of the economy that we have. I think that is very broadly understood and supported on Capitol Hill. So I'm less worried about that than the sort of things that have been in the press lately might suggest.
Okay. The same question to you. Do you feel as though the ECB's independence is well enough enshrined?
Oh yes, I think the ECB has one of the strongest statutory independencies of maybe all central banks in the world. And let's zoom out just for one moment. I mean, this inflation shock that we had, if you compare it to the previous inflation shock of the same magnitude, which was the 1970s, when we didn't have independent central banks, the main difference why I think now we have a credible prospect of getting the problem under control within, let's say, 3 or 4 years, while in the 1970s it took 10, 12 years, and the disinflation was so much more painful. The sacrifice ratios were so much higher, high unemployment, etc. The big difference is central bank credibility. During this huge inflation wave, inflation expectations continued to be well anchored. They never drifted away from 2%. This is so different to the 1970s. And why were inflation expectations so much better anchored this time around? Of course, that you can have a debate about it. It's about psychology, etc. But I would posit that the higher degree of central bank independence is clearly an integral part of that story. So this is a very tangible way in which we can show to society the benefits of having independent monetary policy making.
Would there be anything that you'd like to add to that on the case for central bank independence?
I think Klaus said it very well. I mean,
boring.
In the United States, we don't have the quite the constitutional, I think, support that you have for it. It's a statutory arrangement. It's an institutional arrangement that has benefited the public.
Okay, I'm a little pissed. I only needed to make $80 more, and I would have been at a $69,000 trade. Holy crap. Thank you, J-Pow, for pumping the calls. We just sent that alert in the Stocks and Psych group like 15 minutes ago or whatever. So thank you for being a dove today. I might re-enter those positions because that was ridiculous. Just a heads up what was played. Look at this. Literally played line to line, baby. Line to line. Those are the kind of calls I like to make in the Stocks and Psych group. Boom, that just printed. You see it. There's the P&L for today. Today, May 14th, 758, 68K, and legit line to line. That's it. Those are the alerts I like to say. It's not 69,000, so I'm a little pissed off at myself, okay? I should have been $69,000, but it wasn't. Anyway, so just saying, let's go back to Powell. If you want to remember, there's a coupon code expiring. You get lifetime access to those sorts of alerts in the Stocks and Psych group if you join those at meetkevin.com. Oh, they're over.
Good. No, please sit, because we just Jake, sit for a minute, because we would like to thank you officially also from the whole board, from the Foreign Bankers Association, who has asked me and given me the honor to say some closing remarks after this really impressive session.
I'm going to go through a summary of everything J-Pow just said, so we'll do that. And then just in transparency, I want to show you the minute the alert went through. The alert went through, I could show you because some people are wondering. The alert went through at 7:48, which is 10:48. So it's right there on the candlestick, right there. That's where my buy alert went through right there. And it's still holding on to this line, by the way. So, you know, I mean, you could probably get out a couple sticks more profitably than me. Now, I don't trade for you, right? I can't guarantee that you buy or sell or whatever, and you got to have desktop notifications on and stuff. But I thought this Powell meeting was pretty bullish, and I thought there'd be a little bit of a rally there. And I think that's what we're getting in the Qs as well. I don't know. So if we get some dips here, I might want to re-enter and play some trades again. Like I'm also watching Enphase is another one I'm watching. Because look at that, folks. It's a perfect move on the 113. Like I just find when I play the lines, I make money. It's that simple. I play the lines, I make money. So simple. Let's go, baby. In that trade, up 50%. Let's go. That's freaking awesome. Good job. Congratulations. So, I mean, that's just what I find. So, but yeah, in transparency, that alert went through at 7:48. And I can actually show that to everyone. So, you know it's not bullshit. You just saw the chart. And my goal is, like, if I make money or lose money, I just want to be transparent about it. I've shown my losses too. This is the top of the alert. I don't want to put it all up there. But you can see 7:48 going calls for this J-Pow, post J-Pow speaking. And then I go into some more of a description in terms of why and blah, 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 and what I think is going to happen and so on and so forth. And then also where I think the stock is going to, which is what we played there on Tesla, which again, just turned into this on the P&L. This is the realized P&L. Realized P&L. Let's go. There, I'll hide that, and you can see that it was two trades. It was Tesla and Spirit. Anyway, all right. Let's do a summary here of J-Pow. So yeah, anyway, if you have questions, just email us at staff@meetkevin.com. We'll take care of you. And coupon expires tomorrow for the Stocks and Psych group. So, okay, are we done with J-Pow? Who's speaking now? I mean, J-Pow's still sitting there, so I don't...
Behind the FBA, and already for many years, Alet Kudam. Without you and your immense support to support the FBA, its members, and the FBA board, and the wider community, we would never have been able, and certainly not being able, to hold these great events as we have here today. May I get an applause, please?
Let me see if there are closing statements here. Like, if J. Powell gives any closing statement, it's important.
Please allow me to also extend a thank you to everybody who has been supporting and organizing this event, including Team DNB, Cognito, and also all the staff present here today. Additionally, we would like to thank all our business partners who throughout the years dedicate their time and resources to provide...
And again, what I'll do is, once we have the all clear here, I'm just going to go through a full summary along with my distillation of what J. Powell just said. It actually has pretty big implications for tomorrow as well. So, you know, we'll listen in because I think we got some hints here. All right.
It's an interesting story.
Oops.
For information about FBA and the events we organize. So again, thank you very much and have a nice evening.
Anything? Anything? Closing statements? That is? That's it? It's gonna be it. Bro, come on, man. Look at that. Look at that. You can't make these lines up. I don't understand it. I just know the line to the line, I make money. I fight the line, I lose money. That's it. That's just what I've learned. So when I send the alerts, if I play the lines, I personally find there's a higher chance of making money. Obviously, I'm a little happy today because I mean, a little pissed I didn't make an exact 69. I wanted that 69 in the front, but you know, we'll take it. All right, let's go do summary here, and this has implications for tomorrow. So let's get started here. One sec. Okay, all right. So to do this, let's see here. How am I gonna do this? How am I gonna do this? Okay, we're gonna put this right here. Up. Okay. Sorry, it's just gonna take another second here. Let's push that button. And then this button. Okay. All right. Draw the lines higher, please. That's a good one. I like that. Okay. All right. So let's push this button over here. All right. Summary time. Got to fix the hair a little bit. Got a SpongeBob mug ready. Wow! Just this morning, we got producer price numbers, and J. Powell had a big message for us, and I think he gave us a hint as to what we should be expecting for tomorrow. This is a pretty big deal, so let's get into exactly what happened this morning, what Jerome Powell just said, what to expect going forward, and how this could affect your trading and potentially long-term investing. In this video, I'm going to go through my strategy going into CPI as well to give you a bit of a preview of what's going on. Keep in mind, just this morning, I sent out an alert at 7:48 a.m., which puts you right here on that, oops, let's go ahead and, there we go, puts you right there on the Tesla chart, and we played calls all the way up to that 178 line. When we sent that alert out, we were able to pick up almost 69,000 bucks on that Tesla and that Spirit trade. We do have an expiring coupon code on those trade alerts in the program on Building Your Wealth in the Stocks and Psychology of Money group coming out tomorrow at 11:59. That'll expire. We did send that alert just so you could see it. Now keep in mind, this is California time. We sent that alert right there at 7:48, which aligns, since my Weeble's on Eastern time, which aligns, and I gave a full description there, I'm just showing a little preview there, which aligns with my alert right there, 10:48 Eastern time, 7:48 in California time. So we played these lines pretty nicely, got out at about 178. Let's go! All right, so now for the summary. So PPI this morning came in hotter than expected. J. Powell was asked about it, and he indicated, hey, look, it was actually pretty mixed. The reason for that is some portions came in hot, and within, that's the services section, came in a little hotter. 3/4 of the increase was due to services, and we got a little hotter than expected read in the April data. We had an over expectations month over month and core month over month read, but the downward revisions from last month were actually greater. So we beat by 0.2 on the month over month, but came down by 0.3 on the prior month. And then on the core month over month, we beat by 0.3, but came down by 0.3, which is sort of balancing this out, if anything, somewhat to the dovish side. Now, Jerome Powell, when asked about this, called this data mixed. Now, what's interesting about this is he's asked, hey, you know, what part of inflation concerns you? And this I thought was very interesting. He said that really, you don't need all three of the buckets. Remember, goods, housing services, and non-housing services. He says we don't need all three of those to actually come back down to 2%. This is the first time he said this, and that's the moment that I went bullish. When he said this, I went bullish, because once again, he started washing his hands of higher inflation data, which that might be short-term medicine. Maybe he's just propping us up to let us down. In fact, I think my "this time is different" count, he said this time is different like 3 or 4 times during this time. We'll talk about that in a moment, but what he really did, so, you know, maybe he's setting up false expectations here, right? But what he really did is said, the PPI data was mixed. We'll see what CPI comes in tomorrow, but we still expect some progress on inflation in the second half of the year. And we're going to need more than just 1 quarter of data to see what the trend of inflation is. So think about what he did there for a moment. He washed away the entire first quarter going, 1 quarter doesn't make a trend. Look at how dovish he's trying to be. He washed away the entire first quarter. This morning he's like, the revisions were good. It was pretty mixed. Not a big deal. We're going to need more data than that. And then when he's asked about, you know, rates basically potentially going up, he suggests, very small probability. He does say, I don't want to give up on it yet. Now, I thought that was interesting because it does somewhat imply that there's a little bit of him that says he might have to flip on us and U-turn and go Paul Volcker. That's kind of why in my trade alert that I sent this morning, that almost $69,000 realized profit, right here, I wrote 80% bull, 20% hawk. The 20% hawk that I wrote on this post is because Jerome Powell gave this hint that I haven't heard him give before, this, I don't want to give up on it yet. So he's really confident that inflation's going to come down. He just believes it's going to take longer. But I want to be clear, when he says that you don't need all three of those buckets to go down to 2%, to me, I thought that was really interesting. That was breaking with the tradition of what markets have thought, that you really want all of those buckets at 2%. He's really trying to say, hey, if we have, you know, housing, non-housing services inflation running at, say, 3%, and goods inflation running at -1%, and housing services at 0%, well, then we average to, let's say, 2%. The math might not be perfect there, but you get my point. The point is, if you can average out to 2%, then who cares if services are running a little hot? That was another way of washing this inflation data. And that's really weird. I don't know if it's sustainable. Now, keep in mind, obviously, we're in the middle of a meme rally. We've got, I've actually posted the short interest on ehack.com. Just go to ehack.com. I posted all the short interest for today that people have been interested in. SunPower at 95%. This doesn't cost any money. This is totally free, right? I like to be transparent. Yes, the courses on building your wealth with the expiring code tomorrow, those cost money, but you only pay for those once. You know, some people have been in those for 4 or 5 years now, and they get more value every single day. But anyway, SunPower 95% beyond, Meet 41%, EVgo 31, Plug 28, Run 24, Lucid 31, Virgin Galactic 30, Laser 30, Carvana 28, Spirit Airlines 27, Microvision 25, GameStop 23, Tupperware 23, Rivian 21, Fubu 21, AMC 19, SoFi 18, Tilray 14, Clove 13, and DJT 9.3% short of as a percentage of float over here. So you're going to see some of this data over here on ehack.com. You're welcome to scroll through this and see this. But you also see some of my notes from JPow. But let's keep going because I'm also adding more sort of opinion here in this video to add to the facts of what Jay Powell said. So that way you get some more contextualization. So I've personally been concerned about the labor market. The labor market's been a big source of concern for me. It's something that's made me nervous and uncertain, mostly because I'm seeing more people get laid off and then having trouble getting new jobs. We're seeing job openings roll over. Jerome Powell says we're back at 2019 levels of labor market tightness, which he says is good. He sort of cheers that we have 27 months of under 4% unemployment, which, in fairness, it's really good data. He's absolutely right about that. Says we have a very strong labor market, rising spending, households are in good shape financially, we're not over-levered. He says consumer spending has held up, business spending has been strong, large immigration, they're consuming and working, boosting growth. The labor market is very, very strong, he says. A little typo there. There we go. Labor market is very, very strong. It's coming into better balance, though. And so he sees it sort of cooling, but he calls it a gradual cooling. Some of the things in the labor market that I've been seeing have personally made me a little more nervous, but maybe I'm being too bearish. And so I have to be real here. When I listen to Jay Powell, he definitely seems more bullish than maybe I have been. And so this is why I also like to, when I heard this bullishness, I'm like, I'm going to buy some calls. And I'm glad, 6.9%, I'm going to take it. I'm going to pick that up and put it in my pocket and go, thank you very much. But anyway, on inflation, higher than expected Q1. He does say he did not expect a smooth road, but inflation was higher than expected. And we'll have to let restrictive policy continue to do its work, basically. And so the big message here from Jay Powell is we can really expect to stay at these rates for longer, that we don't really need to hike. And even though inflation data has come in mixed on PPI, it's not something that's really concerning him at this point. Neither is the banking sector. Now, he did mention a few times this time is different, people locking in low-rate mortgages, and therefore this economy is maybe less exposed to some of the risks of being in a bubble, which he mentioned the word bubble as well. Part of that was due to the banking sector, and he said that the biggest problem in the banking sector is when you get a banking run. The Netherlands central banker was there as well. He talked about June being the tentative first rate cut and services inflation coming down finally, which, by the way, is good. Like, service inflation coming down in the Netherlands is good, because that probably does mean at some point in the long term we'll have global services disinflation, right? And that'll help us in the United States as well. But really, I think overall, this was a very bullish shapeout. It could have been a lot more hawkish. It's not a surprise to me that we kind of started seeing the market move up after that. And going into Jay Powell, we had nervousness, right? So opening statements, you get this rally. Oh no, Jay Powell's starting to talk about inflation. Market goes down. I entered my calls right here at 10:48 Eastern. I sent those alerts. At 10:48 is when I sent those alerts, and you can see here there were a few minutes of sort of sideways, but then as soon as that event started coming to an end, that's when you started really seeing a run. Now, how sustainable that is going to be into the rest of the day, I don't know. I just really wanted to trade Jay Powell talking, but it's possible we could also get a rally into the close. I don't think we're going to have a fall into the close, and you can see here off of that alert. There are plenty of opportunities here to close around 178. In fact, if you wanted to be perfect, I think I closed right about here as we were just hitting 178. That was my goal, run to 178. You could have actually held to about 179.50, almost 179.49 over here. But personally, I'm a big fan when it comes to trading that I go in with a strategy. I try to go line to line. And when I make a profit, I'm going to take a profit. I don't need to squeeze every single dollar out of a trade. The worst thing to have is the FOMO of oh, I should have sold there. I would have had more money. Because that'll leave you in trades too long, and then you might diamond hand a losing trade for too long, and that's when you really get smoked in trading. So just some sort of free trade advice there. But anyway, these are my thoughts on Jay Powell. I have to say, maybe I need to reevaluate some of my my sort of bearishness. But let me be clear. I still see cracks in the labor market. I still see cracks with household debt. BNPL, I think, is this sector, the non-bank sector that Jay Powell is, he's aware of. He mentioned it too. The non-bank sector doesn't have that regulation as much as what he said compared to the regular banking sector. So he's aware of these. I don't know. I have to also be careful that I'm not getting too bullish just because Jay Powell's bullish, but because he could flip very quickly. So I'm going to go into CPI tomorrow hedged. Now, the $69,000 basically we just made basically means all of my hedges could go to zero, and I think I'd still be up money, which is crazy. And I don't expect them to go to zero. But if we get a bullish or mixed CPI read tomorrow, mixed or better data is going to be bullish. The only way we really get bearish data tomorrow on CPI is if we end up getting, let's look at the expectations. We're looking at 0.4 on month over month, 0.3 on month over month core. You'd really need those to come in hot and the revisions not to offset that. So you'd really have to be CPI month over month like 0.5, core 0.5, and the revisions coming in flat, basically no revisions. That's really the way I think you would get a bearish day tomorrow. And I don't think a lot of people are hedging going into tomorrow. So I still think there's an opportunity to pick up some cheap hedges today going into tomorrow. If you want to hedge your long portfolio. Hedges are a little different from a day trade though, right? Day trade, you're playing the lines. Hedging, you're really playing an event, and you're trying to protect yourself from some downside elsewhere in your portfolio in the event you had some kind of correction. So, for example, I'm way more long than I have my hedge, but my hedge is also leveraged through options to where if my hedge pays off, it'll pay out substantially probably more than the loss the overall portfolio would experience. So, again, that's the nature of a hedge. So, we'll see how the day goes. But CPI, obviously, tomorrow is going to be a big deal. There's a chance you get a rally into the close on the bullish JPOW we had today and the mixed PPI data, which I think is a little bit of a hint that we're going to get a pretty basic CPI report tomorrow. But it's also something to keep in mind that the markets tend to have some fear going into the close before CPI, mostly because of the fear of the unknown. So keep that at the back of your mind if you are thinking about going bullish on the day. NVIDIA's obviously gone from negative to positive. You can see that here. I wouldn't, there is a risk that while you could run towards the close, like the last bid into the close, sometimes you see a sell-off right before CPI. So if you're getting tendies on a run, if they come quickly, I'm a big fan of taking them. If you can milk them throughout the day, great, take them. BTC is sending a somewhat bullish signal, given that we're trending above that 61.7 line. This 61.7 line, everybody should have this one drawn. 61.741. It's not so perfect right here on the 1 minute chart, but if you go out on the 30 minute, it's okay. You got a couple rejects over here, a few rejects over here. I just find we sort of magneto around that. That's just see kind of pause over here a little bit. You get a bounce over here a little bit. We've played this line many times before. 3 over here, 1 over here. And when we extend below it, we keep coming back to it. And when we extend above it, we keep coming back to it. So that's just been sort of a recent trend that I've seen. I drew it as yellow because it's not as perfect as if it were a blue. That's just sort of my trading strategy to differentiate the lines that I have. Yellow is like, this looks like something that's going on. Like one that I saw as well that we traded on. This was a rougher trade. I only made $800 on this trade. I was up like 5,000 or 6,000 at one point. And I kept holding it, and I got out at positive 800. But it was this trade line right here, 1794. When we rejected off of that line, I closed and then it dropped all the way down to like $16 or whatever. So this I think is becoming a more important line. Though we'll see. We kind of touched it a little bit over here. So we'll see what happens with Robinhood. Clearly, we're moving up a little higher now because of the momentum movement that we're getting over here at GME and AMC. GME line today that I'm watching personally for trades is right here. It's where we're sitting right now. Basically, the 52, 40-ish line right about there. trying to break through on that now. So that's another one that I'm watching. So we'll see. I'll do one last check here on Enphase, and I'll give some final thoughts. This No Man's Land, not ideal. Remember, I'm a big fan of playing the lines. An easy one today, I didn't play this one, but it would have been an easy one, is when we extended above 19. I was looking at it, but I usually don't like trading the first 15 minutes, so I did not trade on it. But I was watching it, I'm like, ooh, extending above 119, that's going to pull back. Sure enough, pulls back, breaks the 119. Look at that. Right down to our 113 line and comes up. And you know that line's been there for like ever. 113.40 is the line. So I like playing the lines. And I don't know if we're going to have enough momentum to really push Tesla higher than this. It's possible, but I don't know that we're going to make it to 183 today before CPI. Now, if we get a bullish CPI, we'll push right up to 183 tomorrow. But I don't know that I want to bet on a bullish CPI, and that's why I'm going in a little hedged, especially with that PPI data we got this morning. If we don't get as generous of a revision, we might be a little screwed on CPI, but we'll see. Jay Powell still, keep in mind, thinks that there's a good chance we're going to see a downward move in inflation in the second half of the year. So that's Jay Powell's take, is the second half of the year ends up giving us the bullish inflation read. Now let me see what the suits are saying, if there's anything on Jay Powell from what the suits are saying. Sometimes you could get something from Nick T. If you don't follow him yet on Twitter, I'm a big fan of him, X. He's a good guy. And we have any tweets from him? 55 minutes ago, no meaningful change in the economic outlook since Powell's last comments. No meaningful change in the outlook today. Key line, we're just going to have to see where the inflation data fall out. So Nick T, other takeaways, Powell maintains policy is tight by many measures. The policy rate is restrictive. The question is it sufficiently restrictive? And that's going to be a question that time will tell. We do not expect this to be a smooth road. These are some of the similar summaries that we got. Balance of risk, no timetable for cuts. He used to, by the way, say, we'd like to cut this year. We didn't see that here. Now, if I go into the probability of rate cuts in December, we're sitting at about 1.75 right now. So we've been somewhat stable there, and tomorrow's CPI is really going to move us into one direction or another. So that's Nick T, a little bit from the suits as well, and broadly we got a little bit of that post Powell rally here as expected. How we go into the close, I think will be tenuous again until CPI. Keep in mind that CPI tomorrow is like the last big catalyst for a while. I mean, you got NVIDIA earnings coming up, and obviously those will be a big catalyst for AI. But I mean, I'll read off the catalyst to you. Quick reminder: the first catalyst after CPI and retail sales tomorrow, which CPI we've already gone through. Retail sales are expected to come in. Advance 0.4, X Auto 0.2, X Auto Gas 0.1. So low expectations on retail sales. We could beat that. You do not want retail sales to come in negative and CPI to come in hot. That'll freak people out. That'll be a stagflation trade. The hedge will pay off tendies on that one tomorrow if that happens. Stagflation is not what you want after tomorrow. After tomorrow, so after CPI retail sales, the next catalyst will be the expiration of the coupon code, 11:59 p.m. tomorrow. Remember, we just, while we JPOW traded, pulled off this almost $69,000 profit. That's a realized P&L for today on two trades we placed, one on Spirit Airlines and one on Tesla. So if you want those trade alerts, make sure you're part of the Stocks and Psych group, and you'll get all of those trade alerts. No guarantees we can always print, but let's just say we've had a really good last 30 days. It's been killing it. So knock on some wood. Okay. Then email us if you have questions at staff@meetkevin.com, but that expires tomorrow. Most people who email us, they just want to bundle up. They say like, hey, you know, I already have a course. I want the real estate course, or I'm in the real estate course. I want the stocks one, whatever. We're going to get initial claims on Thursday. 220,000 is what we're expecting. Continuing claims, 1780 is the expectation. Those will be slightly softer than what we got last week, so we'll see. We'll also get housing starts expected to be up 7.5% month over month, so we'll see if we get that. That'll be tomorrow. We'll get import and export prices tomorrow, so we'll get a lot of price data tomorrow. All of that, by the way, sorry, that's Thursday morning. All of that over the next 2 days, all at 5:30 a.m. So if you haven't yet subscribed to the Meet Kevin Market Live channel, make sure you do that. Meet Kevin Market Live. You can actually download the Meet Kevin app in the iPhone Apple Store and get notifications if you'd prefer to have that all in one place. And we're going to make sure that comes back up again on Android as well for those green texters. You got to have green respect too. So those are the really the big catalysts coming up. After that, if I go into next week, I get, PMIs, University of Michigan consumer sentiment. That's all a little boring, honestly. None of those are like mega catalysts. Really, the next mega catalyst, frankly, it's NVIDIA. We'll get Walmart on Thursday, John Deere on Thursday. We'll get JD, but Baba missed. So not great there for Chinese sales. Palo Alto Networks, Lowe's and Macy's next week. Toll Brothers, Target next week. NVIDIA and Snowflake, mark your calendar for May 22nd. That's a week from tomorrow, a week from the expiration of the coupon code. That'll come out. We'll also get into it at the end of next week. And honestly, then we're kind of chill on catalysts. We don't have the next FOMC meeting until, I think it's the third week of June. Oh, the second week of June. June 12th. And then the next jobs report should be the first Friday of June, which is June 7th. June 7th, we'll get the first jobs. Actually, I think that's the second Friday because the first Friday might end up on the 1st. Let me see here. Nope, it is the first Friday. Yeah, first Friday, we'll get the jobs data. So honestly, after tomorrow, we're kind of just twiddling our thumbs until NVIDIA next Wednesday, and then jobs on the 7th, and JPOW on the 12th, and then, of course, we'll have CPI again, which you may as well write that one down. CPI release for June should be like June 12th as well. It is. On Fed Day, you get the May inflation data. On Fed Day. That's going to be a wild day. But that's all down the road. So anyway, yeah, that gives you an overview of everything that JPOW just said, my thoughts on the market, my thoughts on hedging. And again, if we could get non-stagflationary numbers tomorrow, maybe I'm being too bearish. Remember, I've been mega bull since like November of 2022. Nike swoosh volatile recovery, everything moon. Up until about the last 6 weeks. I try to be as transparent as possible on the channel. I love all of you who support me and always come back. So thank you for that. I'm not always right. I try to give you my opinions. And I'll tell you, every freaking turn, JPOW, late like this year, he just keeps trying to go for the bullishness. I don't know. I think he already knows what the CPI data is tomorrow. And I don't think he would have been as bullish today if the CPI would have been bad for tomorrow. So I'm like a little nervous that my hedges are just going to get burned tomorrow. But I'd also be really pissed if I closed my hedges and then we got a miss because then I'm going unprotected in tomorrow. And remember, folks, always use protection. And get life insurance in as little as 5 minutes. Did you know they were a sponsor of the channel? I just finished this at the beginning of the video. I say that because sometimes people get mad at me in the comments. They're like, Kevin, it seems like your cup is empty. You're right. Right now it is empty. But anyway, make sure you get life insurance in as little as 5 minutes by going to metkevin.com/life, paid partner of the channel. Anyway, with that said, let's push a button here.
Go yourself. Is that clear?
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Look at that VWAP move. Look at that. Double reject on the VWAP for end phase, playing the VWAP. Wow. That's definitely algorithmic. Anyway, thanks, folks. We'll see y'all in the next one. What? If you want a quickie, wrap your sticky? Stop. No, I've never heard of that before. I can't unsee that. I gotta